Hemant, you want to start?
Let us wait for a minute. We will start. Okay, so very good morning to all of you. A warm welcome to all participants. Myself, Hemant Mehta, Think Tank Multi-Channel Disciplinary Global Platform Chapter Leader, welcomes you all to Think Tank Global Conclave for India Growth Story and Meet the Expert Series, covering in detail management think tank, valuation think tank, IBC think tank, financial reporting think tank, company law think tank, RERA, FAFT, and almost all the subject on finance gamut on think tank, including capital market think tank. As a major part of think tank at the rate Vivek Patra, Vivek in Sanskrit means knowledge and wisdom. Patra is an innovative news updates containing slides on sharing latest development and real life examples by CEO, CXO, CFO, specialists, and professionals with global experience. Today we have Think Tank Multidisciplinary Global Platform special meeting for all stakeholders in finance, corporate affairs, industry, and profession. Think Tank has become in existence since over a decade. Idea conceived somewhere in January 1991 to have conferences, conclaves of CEO, CXO, CFO, panelists, and specialists sharing experience and real-life examples. Our panelists are finance leaders working in reputed companies or profession since many years and have deep domain knowledge. Think Tank platform now is digital, has got an overwhelming response from globally on digital medium and expanding rapidly through LinkedIn and Facebook, etc. Our participants and experts have rich experience in industry and professions who have done CPA, CA, CFA, CS, CMA, ISA, DISA, IFRS, BTech, Master, PhD, etc. Which all the which are having sharing all experiences, knowledge, wisdom, spreading as a reach out, and our website you can visit www.thinktank.co.in. Due to overwhelming response to our annual reports, corporate strategy, and ESG, we have announced 6 P awards and recognitions. 6 P stand for profit, people, planets, professionals, promoters, and platforms. For corporate annual reports and analysts, professional achievers, CEO, CXO, CFO, with a very respected jury, with rich experience in interaction with stakeholders and boards. These recognitions and award would be announced with a rigorous process of choice and interaction with participant, and would be given digitally and if possible in a well-located auditorium in Mumbai, like Yogi Sabhaguru or similar kind of venue, subject to pandemic rules. As participant, you are aware, recently we have launched a much awaited referencer, a type of newsletter you can say, titled as Think Tank Vivek Patra, India Growth Story, a comprehensive conference material compilation over 600 pages, sharing experiences by CEO, CXO, CFO, specialist with latest development and series and blogging. Regulatory frauds, financial reporting, IndAS, IBC, taxation, digital capital market, technical analysis, ISA, bank audit, corporate affairs, and it would be available for subscription, and any ethical contribution by well-wishers is welcome. We will all be covering important and latest development as suggested by many participants in coming weeks. Example, evaluation and financial modeling, health is wealth, cyber security, blockchain, MSMEs, etc. We request all the subscribers to Think Tank YouTube channel to subscribe the Think Tank YouTube channel for watching summits, conclaves, webinars, and join Connect Network on Think Tank webinars group on LinkedIn and Facebook pages, Telegram channels, specially created on suggestion of many participants and specialists. We once again welcome all the members and panel share, and I just would like to specially thank my colleagues in the Digital Globe team, Anupam, Aditya, Ajay, Anurag, Archana, Ashwari, Mitesh, Mihir, Malvika, Nipun, Nischal, Pramod, Praveen, Rakesh, Rucha, Pramod, R. Kanan, Manish, Santosh, Subrat, Sandeep, Umesh, Vivek, Vilas, Yogesh, and others for regularly contributing to Think Tank at the rate Vivek Patra. Today we have an excellent Think Tank multidisciplinary platform seminar and eminent stalwarts and specialists sharing experiences and latest development. And let's have an interactive event. And with this, I welcome our past president of ICAI, Mr. Amarjit Chopra ji. And with this, I hand over to Mr. Manoj to proceed ahead in the meeting. Manoj ji, over to you.
Thank you very much. It is indeed a pleasure and privilege for me here to be with you all. Today is a very important discussion and deliberations on a major development. Company law committee was appointed 2 years ago, and
Manoj ji, can you little bit come nearby mic, because we can't hear you.
Hello.
Yeah.
Can you hear me?
A little bit improvement, but still you can come closer so that we can hear you properly.
Yeah. So, very important developments during this week.
Yes.
Usually we cover latest developments with an expert panel who is who from industry and who contribute to policy making and also corporate developments, professional developments for the India growth story. Very important developments. Company Law Committee appointed 2 years ago to take India to the next stage in corporate affairs. Most transparent and for the India growth story. Finally, it has come out with its recommendations. After a deep dive into so many clauses for development of the corporate sector, rectified anomalies because it's always a stage of corporate evolution, and also for the India growth story. There are lots of developments. Year has ended. Financial results of companies have started coming, and the market is at a vibrant stage in spite of challenging developments on the geopolitical stage and dynamics of inflation and interest rates and fundraising. But we are moving to the next stage, and today, as usual, we have a top-class panel, eminent experts to deliberate on major developments and deep dive into the corporate affairs and developments. Particularly, I would mention the Company Law Committee has come out with recommendations for taking the profession and the corporate to the next stage. Over, I think, 26 recommendations for corporate affairs, Companies Act, LLPs, and also to see we are able to set right most of the observations based on developments happened. Particularly, I would like to acknowledge, besides so many experts, Mr. Amarjit Chopra, very well-known, reputed chartered accountant, member of the Company Law Committee, also a past president of ICAI, and very well-known for ethics, integrity, and known for articulating his views very, very clearly on various issues. So people are able to understand the 360-degree perspective of any issue. So decisions are made after proper review and discussions. Mr. M. Narendra is here also with us. M. Narendra is on the board of top-class companies and has experience as a MD and a chairman of top-class banks, experience with IBA, Indian Banking Association. He has taken it to the forefront in the global stage when he was with IBA. Now independent director on the board of reputed groups like Adani's. He is with us here. Mr. R. Kannan is here with us. Mr. R. Kannan is well known with many industry bodies like CII, SOCAM, and FICCI, and always known for articulating views. He has been head of performance ratings of groups like Hinduja, worked with TCS, worked with ICAI Bank also, and Archana Moge, a well-known chartered accountant. She is a winner of the Industry Members Award of the professional body ICAI, and has been a speaker on important topics and also a moderator of world-class conferences. Digital, many of them digital in the last 2 years pandemic. And we have many more experts joining us also during the deliberation. And particularly, I would like to mention some of our members. Nilanjan is here with us. Experience at director level with BSR earlier for over a decade, and now with KPMG. He has volunteered to make a short presentation, simplified over 95-page report into a few slides, key and core issues, which he has identified for discussion, and we have decided to make the discussion very comprehensive. If necessary, the bill passing takes long time. We all know about CA 2013. Lots of discussions were held by the finance minister himself in physical environment all over India. If need be, we'll break it up into multiple parts. We'll have a series of sessions. This is the first sessions. As usual, think tank platform is always at the forefront in leading discussions. So we'll have discussions here, deliberations from various angles. People will look at it from the board angle, the management angle, director angle, KMP angle, auditors angle, joint auditors angle, audit report angle, standardization of auditors qualification angle, and there are some more like us. We would be interested in listing of Indian corporates on the foreign stock exchanges, so we get proper valuation. We will look at those issues also. Buybacks, there are lots more, but we will see that no issue is left undiscussed. Any other panel from all over India with experience in top companies, professions, they are welcome to raise any issues. And particularly, I am very glad Mr. Amarjit Chopra has said he is ready to answer all issues.
The voice is gone.
Manojji.
Manojji, your voice is gone.
Manojji, your voice and camera both are gone.
I request Archana ji to, yeah, please.
Hello?
Yeah.
Hello? Can you hear me?
Yeah, now we can hear you, please.
There was a call from the chairman of WRC of ICAI, Mr. Kachwala. I wonder if he has joined, and he should be joining in any time. Yeah. So maybe I'll connect with him. So we will discuss all the issues, and Mr. Amarjit Chopra has actually very gladly said he will answer any issues, take up any issues, auditor's issue before signing the audit report, make the audit report relevant. That's very, very important. And we should not only what many of us feel, we should not only cross the expectation, meet the expectation gap, we should exceed the expectations of all the stakeholders who use our statements, and be world class and be at the forefront in the global stage when India is getting recognized as one of the most powerful, not only the economies and in the growth cycle, but also in terms of leading the world politically. Also, our views on so many issues are not sought after. The world presidents of top countries, they take the initiative in approaching India and getting their views. So why don't we have our companies at the topmost forefront level? So that is it. Wonderful initiative. Archana, can I hand over to you? You can moderate the session at length, and then we'll have a presentation and deep dive deliberations.
Thank you, Manojji.
Just a request, anybody who wants to speak should put their videos on. It helps all the participants and the speakers to understand the context. I think Murtuza Kachwala has joined. Archana?
Yeah.
Has he joined, Mr.
am I
Murtuza
audible?
Kachwala?
Okay. Yeah, am I audible?
Yeah, I would like to acknowledge the presence of Mr. Murtuza Kachwala. He's has been a part of think tank for a long time, and also has contributed very excellent presentations on relevant topics on technology and audit perspectives in the last year. And Mr. Murtuza Kachwala, glad to have you here. And you have become the chairman of ICAI. I hope you will take ICAI to the next level, not only this year after 2 years of pandemic, but also in the years ahead, at the policy making level, you are connected with lakhs of chartered accountants. And to see ICAI becomes #1 in the world, and not only we meet the expectations gap, we exceed the expectations. As Abdul Kalam has said, India, the CA profession is should be among the foremost professions, and it's very, very important. So there are lots of expectations from you this year also. And yeah, we just had opening remarks. I would like Archana to start the session to do the moderation. And immediately after Archana, you say your opening remarks, I would request you to request Mr. Murtuza Kachwala to give a short special address. We have a lot of eminent people out here, Mr. Amarjit Chopra, past presidents, Mr. M. Narendra, Nilanjan, lots of people from industry, corporate, directors of companies like Adani Enterprises, and many, many large groups, and top bankers, and also from the top 10 companies, top 10 professional firms, SMEs also. Yeah, Archana.
We now start our session. As Manoj ji said, if Murtuza ji can just give a short address before we start with Nilanjan to explain us the recent changes suggested in the company law committee.
Thank you, Archana. Very good morning to everyone. And Manoj ji, thank you very much for all the good words. Really, see, like in line with discussion with Manoj ji today, I'll try to keep it very, very brief, maybe 2 minutes. But since we are talking on the company law and the auditor's appointment, resignation, and various other aspects, I would want to touch upon the importance of the standard on auditing. And see, like especially, I think when we talk about our SMP practitioners, like still many of them do not even take an appointment letter. And even like today also, when we see appointment letter is as simple as you are appointed as to do the audit under the Income Tax Act for a fees of rupees 10,000 for the year ended 31st March 22. That's it. I think it is very, very important that we have detailed appointment letter and giving various conditions in terms of like what is our responsibility, what is the management's responsibility, what is the deliverable we'll give, by when are we going to give, who are the people who are going to work on, if something goes wrong, what is the responsibility and what is our liability. Okay, what if I got data in my computer and the computer get like lost somewhere, the article clerk misplaces the computer and the client launches a claim on me for a few crore rupees, saying that my client confidential data or my customer data or my rate card has been lost and gone to the competition. Now, will I have to pay that type of a liability in a court of law? The answer could be possibly yes. But can I protect myself by adding one sentence in the engagement letter? Of course, I can, and I can say that in case of such a happening, my liability can be limited to the amount of fees received in the date of the happening or something like that. Similarly, if it is a multinational client, they may go and file a case in a court of law in UK. Will we be able to take a flight and go every time and appoint a lawyer there? And will the fees suffice? And maybe then why don't I add in my engagement letter saying that like anything can be tried only in the court of law in Mumbai? Okay. So I'm saying these are simple type of things, and an engagement letter now runs into 5 or 6 pages with the 40-45 clauses. And the templates are also being given in the standard on auditing booklet, okay, in the CD as well. And a lot of soft copies and the material is available. I think we should take them. And of course, we cannot copy paste, but we'll have to make correction and tailor it to our client's requirement. So that is one. But I'll quickly only touch upon 2 more aspects. See, like one, definitely we take a management representation letter, but we get the management to write a couple of things. But I think the management representation letter also has to become exhaustive and need to cover various aspects. And there are a lot of formats available for that as well. But let me also touch upon one more thing. See, there are matters which are significant or which you want to bring to the attention of the key management personnel. And at times, they may not be an emphasis of matter or a qualification or disclaimer or X or Y. Now, how do you bring those matters out? So by way of giving letter to the management. It is called a management letter which large firms give out before they sign the audits. Okay, but do everyone issue that letter, bringing out those aspects which we identify during the course of our vouching or posting or checking or review or interviews, whatever we call, okay, during the whole audit planning and process. So I think these are small things, but you can keep on speaking on the standard auditing for the whole day, from analytic procedure to understanding of knowledge of industry to sampling and how do you do the sample, and now with the IT, understanding of IT environment and the data analytics. So I think it is important, and I would request Manojji that let us also have maybe one session sometimes on standard auditing where we can get a couple of speakers and spend 2 hours maybe, if that attracts all the participants here. So this year at WIRC, the focus will be to do a lot more in terms of increasing the professional opportunities for members, and we are designing a refresher course on direct tax, indirect tax, international tax, valuation, and multiple others. And we'll keep on sending the details to the members so that members can attend, they can get knowledge about these things, and maybe they can decide to take this as an area of practice. That is number one. And number two, we are planning a lot of IT initiatives. We are starting some IT courses. We are developing some small tools which can be made available to the membership at large, free of cost. And we are also trying to talk with software vendors and tie up with them. So the focus will be to increase the opportunities and make members, IT enabled. So that is what I thought, let me keep it very, very brief. And Archana, over to you. And thank you very much. Thank you for giving this opportunity.
Thank you, Murtuza ji. Thank you for elucidating on the standards of auditing and, simple things like what should be there in the engagement letter and the appointment letter. Thank you, Murtuza ji. Now I invite Nilanjan ji to start with his presentation on the changes proposed in the Company Law Committee. Nilanjan, over to you.
Thank you, Archana. And it's been a very warm and a good opportunity for me to speak and collaborate with many senior professionals, especially from a personal side. I am honored to interact directly with Amarjit Chopra, whom I held in very high regard.
Thank you very much.
As a professional. Thank you, sir.
Nilanjan, really thank you very much. I can only say that.
Oh,
God bless you.
Thank you, sir.
Acha, Mr. Amarjit Chopra, can I request you to just in 2 minutes respond to Murtuza Kachwala, and we are looking forward to a great inning for the profession. Just a couple of minutes, and then Nilanjan will start his presentation, a few slides, a deep dive into the company law affairs and the company's bill and LLP bill. Then we'll have a deep dive discussion.
I can definitely do that. No doubt about it. And very frankly,
Sir, your video is on.
yeah, I will just.
Yes.
I hope it is there now.
Yeah,
Yes.
I can see you, sir.
Sir, good morning, sir.
Good morning, everyone, and particularly Manojji, Adityaji, Narendraji. I think I'm seeing Narendraji after some time. He has been a very dear friend. And of course, Murtuza ji was there, and Hemantji was there, Archana, and all other participants. I think whatever has been said by Murtuza, it makes a lot of sense, very frankly. We are talking about company law amendment, we are talking about everything. But the problem with the profession today is that the smallest of the things that we are supposed to do, we may be missing out on those. When Murtuza talked about the appointment letters, I can tell you, sitting over in the disciplinary committee in the last 4 years, particularly because, of course, on 12th February, that term was over. One has actually witnessed that you forget the engagement letter. Even appointment letters in some of the cases are not on record of the members. That arises the problem. One member files the case against the other one that he has taken away my appointment. But when you ask where was your appointment letter, that appointment letter is missing. All those things are there. And I have always believed in one thing. You talked about it, that India could be the world leaders. all these years we have been talking of following what the others have done. Particularly with regard to the auditing standards, I have been saying it now, even at the government level. Why should we be only followers? I think we can be leaders in some of the matters. I think Indian accounting profession is well advanced today. We have more than 350,000 members. Forget the number. I'm not on the quantity part. Even on some of the quality parts, some of the professionals are extremely brilliant. So why not to start thinking in terms of the auditing standards, which may not be absolutely conducive to the Indian conditions at all? And do we say that all those people from the West who have been talking about all these auditing standards, the frauds were never committed there? I think, and Ron started from there, Lemon was there, Parmalat was there, everything was there. So saying that these things have not happened there is meaningless. Ultimately, what is more important is the human integrity, to my mind, very frankly, at any point of time. So I personally feel, but one thing that Murtuza said was about the management representation. My only reservation about management representation is that we try to incorporate every clause into the management representation and then forget about it. We leave it as if the management has given me a representation, I am absolutely dutiful. No, I think if I read the standard on auditing, it is very clear that each representation that the management gives has to be tested for its veracity and authenticity. Unfortunately, what one has gone through in the last 4 years in the disciplinary and earlier 3 years in the disciplinary committees, people come up with the management representation and say that this is what the management represented to us, so we have relied upon that. You can't rely upon the management representation blindly under any circumstances. However exhaustive you may make the appointment, this management representation, ultimate responsibility of checking the veracity and the authenticity of the management representation lies on the auditor. I think we shouldn't forget about it. In all the tax audits, what one has come across is inventory as certified and verified by the management. It can't work. It can't work as valued by the management. It is my responsibility basically when I do that. Similar things have been there in the other aspects also. I personally feel whatever Murtuza has said and his initiatives on the IT are absolutely worth praising. And I only can wish him a great success in the year to come because IT is the only way now to improve the audit processes. But there also, I think IT will also have its own limitations. When you come to the analytical procedures, whatever analytical procedures might throw by way of IT, I think ultimately it is the human brain. There is no better computer than the human brain under any circumstances. A current ratio improving does not mean that the company is doing well. Maybe the debtors are piling up. Maybe the inventories are piling up. So all those kind of things can happen, very frankly. So my congratulations to Murtuza for assuming the role of the chairman of the WIRC, the largest region of the country, so far as the ICAI is concerned. And I'm sure that under his leadership, WIRC is going to do a wonderful job. And particularly, again, I repeat, his initiative on IT are absolutely worth praising. Thank you very much, Amarjit.
Thank you, sir.
Thank you, Amarjit. Mr. Murtuza, I would just say, earlier you were always talking about contributing to the region, WRC. Now, since we have been interacting after you became the chairman, February last week, you have expressed a desire to contribute to policy making at a national level. I wish your dreams come true, and all the chartered accountants, more and more you are interacting with. Also at a global level, you have global experience in other countries also earlier with corporates, that in your mission, you are able to not only across the expectation gap, but we as a profession become world-class #1, and we set high standards for other countries' chartered accountants to follow. Whether it is UK, there are multiple institutes there, there's competition there. Whether it is US, there are multiple institutes there, there's a lot of competition there. There are many other countries. If we are at #1 in growth, in GDP, and in talent, contributing best CEOs in the world of global companies, here we are, not only we are good, but we should be perceived to be good. Communication is essential, and we wish you all the best in a longer innings, not only this year. So always ahead. Yes.
Okay, so thank you. I'll just only want to add one thing to what Chopra ji also mentioned and Manoj ji. So like sir, and sir knows that. So like we've taken a lead. Actually, ICAI has taken a lead in like coming up with a forensic standard, which is among the first in the like world. And today, like we've been interested in the task of even writing the sustainability standard. When the whole world is talking about the ESG, maybe ICAI will come up with the first sustainability standards for reporting. So I think we are taking that leadership position globally, and I think we should be in a position where world will accept those standards which we write. So I think.
Murtuza, on forensic standard think tank platform was the first to discuss in a few days, and Mr. Dayanava Sharma was involved with the committee in that year as a chairman. He personally came in from Hyderabad. He was sitting in a hospital, and he joined in from the session, and we had a deep dive discussion, and even sustainability was discussed on that World Earth Day. It is held once a year, and there was a discussion in think tank platform in the morning. Afternoon, there was a meeting of sustainability committee, and this was discussed. Not only that, I believe now SEBI has expectations for setting up a social stock exchange and social standards, which our team at the center has agreed to do on a fast track basis. So we will also see that it is not only we have good standards meeting the societies and regulators, but we are able to make an impact. India has always contributed socially in number one cultures and more important values. So they should come across, and social impact will come, and also in a very well-defined way, so one can benchmark excellence. So it is good you have raised out those points, and we have a excellent deliberative. This has set a tone for a lot of expectations. We have many members of the board. We have many partners here who can contribute to deep dive discussions, and we always discuss latest developments. We will also want leave a Twitter, the valuations of Twitter which are being discussed. So at a later stage, besides Infosys TCI, we discuss deep dive into everything. And now, yes, now most important is the next stage of Companies Act and LLP and taking it to the next level. Mr. Nilanjan, you are there. Experience with right.
Manojji,
BSR,
one point.
yeah, let me complete.
Yeah.
BSR and SR Botley Bike, they are well-known brands through tie-ups. Very, very technical expertise as a technical director. So lots of expectations. Yeah, Umesh Narvekar, you are there. Umesh, briefly, let us start a technical
Just
session.
one point only.
Umesh is a chairman of a branch earlier and likes to have interactive discussions, does a lot of work. Yeah, Umesh, very briefly, and then Nilanjan is ready to start the presentation.
We have the leaders of our profession and torchbearers with us, and I really thank you for Amarjit Chopra ji for coming over here, as well as Murtuza ji. Sir, one direct point to both of you, because you are having the leadership of the profession in your hands. As you said, even the scams are happening across the world. And even today, we are first in the sustainable development standards or even the forensic standards. Though we are first in many things, but is this perception of being first is not reaching to the government's eyes of the governments? Are the leaders are not able to convey this message to the government? Why the perception of government is against us, that they are not, the CAs are not doing? Where is the gap? Where is the failure?
I will answer it out. Definitely after Nilanjan has made his presentation, I will definitely answer it out. I don't know whether Murtuza will like to answer it or not, but I will definitely answer it.
Murtuza ji, please, if you can.
Okay, so I think I'll have to stay back, don't worry, and we'll answer it. Umesh, see, there are like some things which are there in the bill, some which are not there, some which someone said. So we cannot, we'll reply. I think it will need a lot of good discussion. Let us complete the schedule because Nilanjan is also waiting, and we will talk about this. I'll also stay through, don't worry. Okay.
Okay, thank you, sir. Thank you very much. Thanks a lot.
So thank you, everyone. Let me just share my screen.
Nilanjan, you speak a few words about yourself. You have a system of a self-introduction, no long biodata.
Sure. Okay. So as I think Manoj ji also explained, I am in the technical role maybe for the last decade or so. So I had been with BSR for around 15 years. And then after that, I joined SR Bartley Boy recently, where I'll be completing a year. My role primarily deals with helping the audit team on responding to various audit reporting challenges. For example, reporting under the new CARO 2020, or the amendments coming from Schedule 3, or from a auditor's reporting angle. For example, whether you have to qualify, you have to give a material uncertainty on going concern. So anything to do with auditors reporting and regulatory, that's where I try to involve myself and steer the audit team for the necessary conclusion. Okay, so let me share my screen then.
Recording in progress.
I hope the screen is visible to everyone, right? Yeah, thank you. Okay, so today, obviously, we're going to talk about the new proposals which the MCA has come up through its company law committee. So to my recollection, this is the third committee that has been set up. And this time they are going to talk primarily about the strengthening of role of auditors.
But you come in soon. I didn't mention.
Their continued focus on corporate governance, and they have also tried to remove certain ambiguities which the ministry has come to know from various public consultations. So, okay, so that is the broad agenda of the day. We're going to talk about the new concepts. We're going to talk about how technology is going to help them in the near future. This we all know. We talked about a think tank, and we also spoke about the speaker's profile. Okay, so here,
Nilanjan, just a request. I want you to read the full disclaimer.
okay, sorry.
Read the full disclaimer.
Okay. So from a disclaimer side, these are the independent views of the professionals or presentation, and it is primarily for knowledge sharing, deliberations on best practices for India growth story, discussions, purposes, and awareness only, and not the view of the platform, institutes, or organizations that they are associated with. They are only for educational purpose. Please consult your own advisors before taking any decisions on the subject matters. So this is where I would like to start off with. This is the journey till date. As Manoj mentioned, there was a committee that has been set up in 2019 to review the Companies Act and the LLP Act. Between December 21 to Jan 22, the committee had intense discussions. They followed a collaborative approach. They reached out to other regulators and sought their point of view. And then finally, in March 22, the report was released, and it is available for public to give their comment by 6th of May 2022. In a nutshell, the recommendations included greater use of technology, in introduction of new concepts that have been accepted very well at global platform, strengthening the auditors framework, improve corporate governance, and remove ambiguities in the Companies Act. At this point, what I would like to highlight is that some of the proposals, they seem to stem from responses received by MCA on its previous consultation paper. So what has happened is that in February 2020, the MCA had issued a consultation paper on strengthening the audit quality and the auditors framework. So a couple of the recommendations that you see, for example, the use of joint audit and using the work of other auditor, seem to stem from the responses various stakeholders would have given to the MCA. Okay, so moving on the first one on the strengthening the auditors framework, there had been a discussion on the non-audit services. As we all know, the non-audit, the giving of non-audit services by auditors has been a global hot topic, and various regulators have taken various views on a global platform. But as far as India is concerned, under the Companies Act, there is a specific list of prohibited services that has been prescribed. What the Act also empowers is that the central government can prescribe additional prohibited services based on its discussion and interpretations of the Act. Now, if the auditor is not following these requirements, there is obviously a penal consequence, which has also been mentioned under the Companies Act 2013. Now, while discussing this aspect of non-audit services, what the committee also did is that they discussed or took into consideration the report of the committee of experts, which was issued, which was again formulated under the ministry's regime. Now, in that report, the group of experts very clearly said is that there is a need to review the list, keeping in mind the various kind of services rendered by the auditors, which might potentially result in a conflict of interest. Now, so basis the existing requirement and also basis the requirement of basis the recommendation of the committee of expert, the committee felt that there is a need to formulate a different list for different classes of companies. So in a nutshell, what they're trying to say is that for large public interest entities, there can be an approach that the auditor should be permitted to render only audit and related services. There is a recommendation that there is a total prohibition on giving non-audit services, not only to the entity, but also its subsidiaries, associates, and JVs. Right now, then obviously the question is that how do we identify which are those class of entities wherein you have a inherent public interest. So if you would go through the report gives an impression that the benchmarking or the threshold that has been looked at are those entities which are being within the ambit of NFRA, right? And the committee has especially quoted the scope of NFRA in their report. So in a nutshell, there is a proposal to have a complete prohibition on non-audit services for public interest entities. Now, what does this mean? What does this mean for all of us? So I thought I will just put out some of the first impressions which I had when I was going through this. This move is surely expected to boost auditors' independence, right? Because there is an expectation that the conflict of interest would go down. For multidisciplinary firm, this could have a significant impact, considering the curtailment on the bouquet of offering that they can provide. What I would also like to note is that when the MCA had sought comments on its previous consultation paper, what I could gather from various public media and articles is that CII had earlier recommended restricting non-audit services with regard to large companies. And they have also a kind of referred that those large companies should be those which are within the ambit of NFRA. The recommendation also doesn't seem to indicate a separation of audit practice, so from the non-audit services. So if I would like to highlight here, in certain jurisdictions, for example, UK, there is a discussion that whether the audit firms and non-audit firms should be completely separate. But I don't think the approach which MCA is trying to propose is in that line. They're only trying to say that for public interest entities, you would need not be able to provide non-audit services. what is also important for the effective implementation of this requirement is on the clarity on the term management services. So even though management services is one of the prohibited services within the list of the Companies Act, but there are varying interpretations to that term, and people tend to take different views. So what I felt is that for this particular proposal, or for a particular section, to have a much more wider and effective implementation, of a clarity on this term might be relevant. So I can pause here, and if anybody has some comments or maybe some questions, maybe I can help.
I think you can go ahead, Nilanjan. There are no
Okay.
questions.
Okay, thank you, Ashwin. Okay. Now moving to the next important topic, the committee has also recommended that there should be a joint audit, and they have also talked about forensic audit to be initiated in certain situations. Right. So if you would look at the existing requirements now under the Companies Act 2013, it is the prerogative of the company to decide whether they want to opt for a single auditor or a joint auditor. So that's what is written under the Companies Act 2013. As far as RBI guidelines have concerned, they have mandated mandatory joint audits for financial entities having asset size of more than 15,000 crores. As far as the forensic audit is concerned, it is based on the specific instance or the request of the regulator or another stakeholder. There is no specific requirement to initiate a forensic audit under any of the Indian statutes at present. Now, in that topic, what the committee did, they had immense discussions and consultations with the various stakeholders. The committee had also referred to previous studies made by ICAI, and they have referred that they have used the ICAI study of 2013. In that study, ICAI has advocated that there should be a framework for setting up of joint audits, and also considering the fact that since there will be two auditors, how the responsibilities of the auditors would be established. That's a broad framework that they have talked about. However, ICAI in its study also categorically stated that there could be various practical challenges when you are implementing the joint audit framework. So from a requirement perspective, at present, we have the standards on auditing 299, which talks about joint audit. And they also state that the individual auditor is liable only for the work allotted pursuant to the discussion that they had. Now, in this entire backdrop, what the committee recommended that there should be a mandatory audit for certain class of companies. So what would be those class of companies? The committee has not yet stated them, but what they have strongly advocated is that there has to be a mandatory audit for certain class of companies. The committee has also recommended that the Act itself should provide the extent of liability of individual auditors, right? So now, at present, it is there as a standards of auditing. Now would be incorporated in the legislation itself. As far as the forensic audit is concerned, the committee has recommended that the forensic audit may be ordered during investigations, again, of certain matters that will be prescribed by the MCA. Now, the first impressions, if I could state, globally, that there are very limited jurisdictions where joint audits are mandatory. France, as we all know, is one of the most known jurisdictions where joint audit has been there for many, many years now. South Africa, we have joint audits, but it is limited to entities operating in financial services sector. Denmark had joint audits for a brief period for around 1930 to 2005. Well, there are pros and cons of joint audits, and globally also, I think IFAC also did a study on the pros and cons of joint audit. And what they actually stated is that it is not a very clear indication that joint audit will always boost audit quality. But yes, it also said that this conclusion is based on various jurisdictional considerations and also on the limited data that they had. What I would also like to highlight that that other than the Companies Act, also at present under the FDI norms, where a foreign investor is wishing to specify a particular auditor, then those FDI norms require the companies to mandatorily carry out joint audit, right? And those auditor again should not be part of their network. So the idea was that even though it is there in FDI, if the joint audit proposal goes through, it would be covering a much more wider population, and which will be more extensive than what is at present covered under the FDI norms. Now, from a MCA perspective, I think they are very clear that the joint audit is expected to enforce the 4I principle, and it would then consequentially positively impact the audit qualities. Needless to say, this would obviously encourage competition between audit firms, right? So again, on this topic, if somebody has any question or any initial thoughts, I can pause for maybe a minute.
I think, Nilanjan, you can finish off your presentation.
Sure,
then
sure.
Each of the points, I think we can discuss.
Okay, okay, sir. No problem.
Unless Manojji feels that on each of the points we have to discuss, because one could give the perspective with regard to the earlier point or this point. But I think it's better to finish off and then discuss each point separately.
Okay, okay. No problem, sir. Okay. The next topic which the committee looked at is...
Just 1 second. You had mentioned Denmark. Joint audits for all listed companies from 30 till 2005.
Right.
After that, they continued the practice.
Yes, yes. So if you would go through this IFAC paper, which is there on the slide, if you would click, IFAC had already done a study, and in that study they have somehow said that they discontinued joint audits. I mean, the Denmark jurisdiction discontinued joint audit after 2005.
One thing is very important to be understood. In all foreign countries, I think the business is controlled, the entire audit profession is controlled 90 to 95% by few firms only. Whereas in India, the number of firms, which are even Indian firms, the size is pretty good. And qualitatively, this can be done. And if you really ask me today, every C&AG audit worth its name, whether it is IOC or ONGC or BEL, etc., all have been under joint audit. So, and similarly, all bank audits are under the joint audit for that matter. So, if we say that no, joint audit is not a good concept, it can't hold good that way also. And I think this point was argued in detail, because it was argued the other way around also, how it is going to improve quality. But then one came across, as we have been talking of the leadership role of the country, it may not be done in the other countries, but why not to try it out in your own country for that particular matter? Because what has been happening is that whenever a foreign investor comes, he nominates few of the firms only, that these are the firms which are going to be. Now, as a matter of import-export policy also, it was said that one bigger firm and one smaller firm will be there as a part of the joint audit, which has not been followed, unfortunately. That has been the case. So when it was argued before the MCA, it was argued very categorically that it does not in any case reduce the quality also, even if you say that it doesn't improve. And having two opinions, basically, I may be doing one unit, other person is doing the other unit. And if those two units are being done separately and one person says, no, the things are, the controls are bad, and the other one says it's good. I think it is good to have two contrary opinions and then to reconcile and then to have a balanced opinion with regard to that. Because I can tell you that in a few of the private sector banks, what has happened is overall 25 accounts taken up, even in the deposit accounts, or 15 accounts taken up in the advances. And one said that the sample is over and that's the end of the matter. That's no good, basically, for the purpose of the audit. Anybody may say anything. Ultimately, joint audit will definitely reflect upon one thing: different opinions coming with regard to the same organization from the different auditors, and two persons sitting and trying to actually do the brainstorming over that may help out to improve the quality. If there is no empirical evidence that it has improved the quality, there is no empirical evidence that it has reduced the quality also. I think that's very important.
One interesting thing you have mentioned here, a very vital thing. MCA believes in joint audit would reinforce audit quality via the 4 eyes principle. Now, these 4 eyes, sometimes there is a comfort zone. So we just hope that these 4 eyes, they don't open one at a time by rotation. Sometimes they blink and sometimes one sleeps. So auditor is known to be a vigilant, and vigilant role is to be done 24/7 by 365. Carry on. Yeah.
So, Manoj, if I may come here, Nilanjan.
Yeah, sure, Santosh.
Yeah. So, just a question to Chopra sir.
Acknowledge Santosh is the author of 7 books and always the latest on accounting standards, COVID, practically excellent writer on research articles also, and contributing to lots of research work at the institute. And wonderful books everybody should read who wants to do a deep dive into accounting and auditing and this principles related to Companies Act.
Yeah, thank you. Thank you very much, Manoj, and very good morning to all of you. And Chopra Saab, a question to you. First of all, it's an honor and it's a privilege to have you with us. Thanks for making it. Just to react to what you just said, sir, joint audit. Now, currently, the Companies Act framework, I mean, one of the recommendations that they have given, the committee had given, is that Companies Act doesn't seem to be recognizing the joint audit framework at the moment. So if there is some negligence, etc., class action suit, etc., both the auditors will be jointly and severally liable. That seems to be the case, despite of SA 299 saying that each auditor is liable for his own work, individual work. So I think that given the fact that even NBFCs, for example, since last year, even the NBFCs, 15,000, asset size more than 15,000 crores, joint audit is mandated. Now, in an IndAS framework, of course, you mentioned about, the PSU companies, banks, etc. But in an IndAS framework where there are, it's a minefield of judgmental issues. So, for example, ECL karna hai, how much should be the LGD, how much should be the PD. There can be various views because there is no right answer. There is always a judgment. So, I think it's an urgent need to have a framework under Companies Act, because Companies Act may, if, for example, in NBFC scenario, for example, if I am doing, building up on your case, your example itself, supposing some area, the joint audit is doing, and joint auditor has taken a aggressive view on something, then, it becomes difficult for the other auditor to defend, because obviously the auditing standard says that there has to be discussion and, on the key matters, there has to be discussion with the other joint auditor also. But practically, it's not that, all the auditors do it in that fashion. So I think Companies Act, there is urgently this requirement. The recommendation of the committee is well taken, that there has to be some legal recognition of the fact that joint auditors are responsible for their own individual areas.
I fully agree with you. Very frankly, if I refer to SA 299, with regard to the joint auditor's responsibility, it defines the areas basically for which you may be responsible. But when it came before the committee was very clear that probably besides being laid down in the auditing standards, there is a need today that it should be brought into the framework of the Companies Act also. And I don't mind it happening, because if Companies Act says very clearly that there are going to be liabilities depending upon the work that you perform, the courts may or may not recognize your standard, but the courts will definitely recognize the Companies Act. To that extent, it will strengthen the position. It is at the time of framing the law, very frankly, when it comes to the joint audit, that it will become important how the institute is able to reach out and how the committee is able to actually perform its function with regard to framing of that particular law. So right now, I only feel, and I am very clear, that the law framers at that particular point of time will take cognizance of the fact that every auditor cannot be held responsible for every act which will happen. It will be definitely a liability. If there is a common area, in that particular case, it is definitely a responsibility of both the auditors or joint auditors. But if it is an exclusive area which is being dealt with by the two auditors, in that case, it will be the individual responsibilities. I'm quite sure that it will be taken care of.
Yeah.
One point I would like to add, this concept of France, joint audits for all listed companies that prepare consolidated financial statements. That means there are subsidiaries and there are associates. And often there is an opportunity to farm out various subsidiaries or associate to multiple auditors. So if any significant subsidiary is there or significant associate company, and if those auditors are involved in joint audits, it would become more meaningful. And I will just share, I personally have been doing deep dive for last 25-30 years into large Indian corporates like Tata Steel, Tata Motors, L&T, Reliance. Some of them have between 200 to 1,000 subsidiaries. Reliance Industries has 8 volumes of 1,000-page books. And often, as a matter of interest, just to understand how the corporate structuring evolves. So then there are lots of issues to be done. And if that takeaway from France, in fact, the committee has done wonderful work looking at global practices. And if this can be implemented, not necessarily for all, maybe not ones which have a few lakh of assets or turnover, but significant ones, listed ones or even private equity owned ones where there are significant stakeholders, particularly foreign, it could make a little meaning. Carry on. Yeah.
Yeah. And Manoj, just to answer your question also, on the usage of joint audit did across the globe, the way ministry read those global practices is that they stated that fine, the joint audit may not have the direct linkage to audit quality, but what it has actually done is that it has actually disaggregated the entire market. It is not that it is an oligopolistic market where the services is concentrated to a group of firms, but because of this joint audit concept, it has been held across the auditors at large in France.
And quality in audit is a very actually vague concept. There are no tangible benchmarks. We have procedures like peer review. We have various internal controls, but quality, as Japan has implemented quality in manufacturing as they go through passion. Each and every defect towards zero. It is only the passion of the audit firm or the partners or each employee or person engaged in the audit. His passion to deliver quality makes a difference. Sure. So that cultural ethos and change has to come, and it has to be driven by that ethics, integrity, and passion.
Sure.
I fully agree.
Chopra can add to that.
Manoj, I fully agree with you, because there are no tangibles basically, if you really ask me. After all, PCOB had examined all the files of Satyam. Right. PCOB had examined all the files of Lemon. PCOB had examined all the files of Enron. They could not find out whether the quality of the audit was bad or good. I think that is where lies the entire fault, whether the firm is peer reviewed, because it's all cold review. It is not hot review. Let's be very clear about it. Or it is FRRB review. And that is why probably at one particular point of time, you will find NAFRA being empowered against the companies also, not only against the auditors. I think that is one reason that it has happened. It is not that only the auditors can be held guilty for many things. Even the directors and the KMPs should be held guilty for those by the NAFRA. Why NAFRA should be only directed against the auditors? I think that is where NAFRA has been empowered in this entire amendments.
So moving on to auditors resignation. So this is also one of the hot topic which the committee also deliberated quite at length. As far as the existing requirements are concerned, under the Companies Act, the resigning auditor is required to file a statement within 30 days with the company and also with the ROC indicating the reasons and the relevant facts for the resignation. Now, while deliberating, the committee also looked at global practices. For example, they looked at the UK Companies Act, where the resigning auditor is required to expressly state the matters which is necessary to be brought to the attention of the members or creditors. The company has an obligation to forward a statement to the shareholders or approach the judicial body if such information is not being sent. The auditors, on the other hand, are also empowered to call a general meeting in case of a particular situation. What the committee recommended is that the resigning auditor would need to assure that there is nothing in the company's accounts that need to be brought to the notice of the stakeholders. So in a way, the indication is that there are no material misstatements in the financial statements, or there is no questionable transactions or questionable events that has happened, and those have not been taken cognizance of. The auditor would also be required to assert that his decision to resign is an independent decision and is not waived because of any other challenges that he has faced. The regulator is now asking for more granular details. So the committee has recommended that the auditor to make a detailed disclosures about resignation and should specifically mention whether the resignation is due to non-cooperation from the company, fraud, or severe non-compliances or diversion of funds. In case these are identified post resignation of the auditor, there can be a suitable action which might be initiated against the auditor if such matters have not been highlighted by the resigning auditor in its letter of resignation. Okay, so the first impression that I saw is that the regulator is expecting to be aware of the red flags. They are seeking for more granular details. So they are not interested in a open-ended or a overarching kind of a statement. They're actually asking the resigning auditor to pinpoint the exact reason for resignation. What I think the ministry, while it's drafting, may consider is that we already have a direction or a circular from SEBI which talks about auditors' resignation. Similarly, there is also an implementation guide which ICAI has issued on various aspects of the resignation. I'm hopeful that the ministry considers them just from an alignment perspective when they are framing the requirements. We also talked about the penal provisions if the auditor is not disclosing those matters timely in the resignation. However, there could be certain limitations when he has performed the audit. So it may be possible that in some instance when he has resigned because of limitations in the audit procedure, the auditor may not have been made aware of the non-compliances or the diversion of funds aspect. So maybe this particular aspect the ministry might look at when they are framing the overall framework. What will also happen is that under the company's under the CARO 2020, the auditor is required to consider the letter of resignation by the incoming auditor. So if the resigning auditor is making a particular statement, it would be incumbent on the incoming auditor to consider them and also act accordingly when they are reporting under CARO 2020. Okay. The next topic is on the using the work of other auditor. So at present, as we all know, there is a separate auditing standard which provides the guidance on when the auditor chooses to use the work of the other auditor. Under the Companies Act, the auditor of the holding company has a right to access the records of subsidiaries and associates relating to consolidated financial statements. Now, what the committee also felt is that there is no statutory obligation or liability on the auditor of the holding company to formally verify or confirm the accounts about its truthfulness of the subsidiary companies. What I would also like to highlight is that under the previous MCA consultation paper, MCA had specifically sought comments from the general public about the review of the statutory auditor's work paper by the parent auditor, and also whether it would be appropriate for the parent auditor to comment on the accounts of the subsidiaries. I thought I will just bring this point up at this juncture. Now, as far as the recommendations are concerned, the committee recommended that the board should provide a proper oversight, especially on the financial matters of such subsidiary companies. As far as the auditors are concerned, the auditors should give assurance about the fairness of the audit of each subsidiary company by the respective auditor. The auditor should also verify the accounts or part of accounts of the subsidiary company. So in a nutshell, if I can state that the expectation is more as compared to the existing requirements of just relying on the work of the other auditor, the requirement seems to suggest that you also assert on the true and fair view of the accounts of the subsidiary.
No, let me interject here.
Yes, sir. Sure, sir.
The point which was discussed there,
yeah,
and the consensus which was reached there was, one was that whether the working papers of the subsidiary or associate auditors need to be checked by the auditors of the holding company.
Yeah.
So I think on that there was no consensus, and it was said that probably what the holding company auditor or parent company auditor can do is to circulate, and the board will ensure that to happen, to circulate the instructions to the various auditors of the subsidiaries or associates or joint ventures as to what he expects them to do. And those auditors will definitely provide him the assurance with regard to that it has been complied with, and he can test check those. And if at all he feels that there is a need to check something more about any of the subsidiary or joint ventures, he will be free to do that. So to that extent, I thought I will just clarify on this particular matter. Because you know that SS 600 has been a matter of, has been a controversial matter for a very long time.
Correct.
So one way was to amend the 600 to bring in line with the international standards. But then we thought that probably it will be far more appropriate to provide the holding company auditor or the parent company auditor with some kind of power, but not to go to the extent of checking the working papers of the subsidiary auditors. I think that is the balance that one has tried to reach.
Okay. So, sir, what you're saying is that the at present the parent auditor circulates the group instructions to the subsidiary auditor. Now there is a proposal to include those as a part of the statute. Is that what we're saying?
I think as the law will stand amended at a given point of time, it will come in that the statutory auditor will be able to issue the instructions to the subsidiary auditors as to what he expects them. Because depending upon the criticality of a particular subsidiary, because Manoj ji also talked about the material subsidiaries or immaterial subsidiaries for that matter.
Right.
So depending upon that, the key areas that you like to test upon, and they will provide him the reasonable assurance with regard thereto. I think that will be fairly good if that can be assured. And the board will ensure that it happens, that system is put in place. I think that's very important.
Thank you, sir.
I remember that when we were the central auditors of the bank, we used to circulate it to the various branch auditors as to what are our expectations. Now, the branch auditors is such a large number, whether they were doing it or not, it was difficult. But in the case of the subsidiaries or in the case of the associates or joint ventures, the number being much smaller, it will be possible for the parent company auditor to do it. And all subsidiaries are not going to be material subsidiaries. Very few subsidiaries are going to be material subsidiaries. And if he wants to give an instruction, and subsequently, if he feels that no, the work has not been done the way it should have been done, he still feels certain things more to be checked himself, he will be able to do it himself.
Okay.
But this will put more liability on the parent company auditor. Let me be very clear about it. It is empowering the parent company auditor, but at the same time, it is making him more liable also.
So now the next item which the committee also looked at is the impact of qualification or adverse remark on the financial statement. As we all know, under the standards on auditing 705, the auditor is required to give a qualified disclaimer or adverse opinion, and the standards also guides the auditor in the manner of making that report. As far as the Companies Acts are concerned, there is a specific section 143(3)(f), which requires the auditors to provide observation and comments on the financial statements. There is also a separate section which requires the auditor to provide their reservations on matters relating to maintenance of books of accounts. As far as the directors are concerned, directors are required to provide their reason and explanations for any adverse remark made by the auditor in the audit report. Now, what the committee also felt is that irrespective of having a stated framework, the auditor's observation did not sufficiently elaborate the impact on the economic health or functioning of the company. So in that backdrop, the committee recommended that the MCA should prescribe a format that would enable the auditor to state the impact of every qualification or adverse remark on the financial statements of the company. And that format should be circulated to the board and should also be passed on to the shareholders of the company. Now, in this, what I thought is that probably this recommendation is stemming from the SEBI listing regulations, where there is already a format for stating the impact of audit qualifications. And this format is required to be signed both by the management and also by the auditor of equity and debt listed entities. So if you could see on the screen, I have just given a snippet of that particular format. It tells you which all financial statement captions will get impacted, what are the implications, and what would be the adjusted numbers after you adjust the effect of qualifications.
I would just like to take this opportunity to acknowledge Mr. Peshwan Ankleshwaria. He is here with us, and Mr. Robin Banerjee. Peshwan? And Mr. Robin Banerjee. Mr. Robin Banerjee? You are there with us? They have joined us. They would be interacting on 4 critical issues. Peshwan is a ICAI also, besides being a partner in a top leading firm. And Robin Banerjee is a CEO and on the boards of several companies. And I would just like to mention here, when we talked about subsidiary companies, and there are some groups which have got hundreds of subsidiaries and thousands, and some of them have bank borrowings also of thousands of crores or even more than 50,000 crores. When you do a deep dive into some of the subsidiaries, Some of them you have 50 subsidiaries, some have 200 subsidiaries. And somewhere you find an address of a chartered accountant, whatever, every CA is a CA, right? He has passed the exam and he is a COP and doing the audit. Address of Kalba Devi, and there is a 2,000 crore debit and 2,000 crore credit in the accounts, a foreign subsidiary. Then you ask address of Kalba Devi, then you ask the CFO of the company, do you know this auditor? Have you seen it? Have you seen his office? No. You ask a board member, have you seen the office of the auditor in Kalba Devi? 2,000 crore, what is the transaction? Can you explain? I not seen, possibly the CFO should know. CFO then promises, I would like to see it next week itself. This is what is actually going on. And there are people who are going in companies with the briefcases and rubber stamps. Now, of course, the new format of Audit is there, and just a sign and collect whatever fees they are getting without even looking at the accounts. And these are some of the reputed or large groups which have huge bank borrowing. And some of them try to hire influencers, well connected, so they get so-called some kind of protection. They are not hauled up at appropriate forums at the right time and things are delayed. So this needs a point of maybe such issues have come to the attention of the company law committee members, and they want to improve the quality, particularly subsidiaries, associates, and looking at world benchmarks on the developments and how they are treating it. Any comments from any of the panel members on these issues? Any other people who are on a panel?
Manoj,
Hello?
Sir, your voice is breaking.
Sir, we can't hear you.
Hello,
your voice
am I
is
audible?
breaking, sir. Now you are audible, sir.
Now I'm audible. You see, one of the points which was discussed has been that
I think the voice is breaking.
Voice is breaking, and I think, sir, if you off the video, probably the voice will come over.
But video is also.
Video has already frozen over there. Like, that's what I can see. Amarjit, sir, your voice is not audible.
I will try through the other system. Okay, you can move on. Hello. I'll try through the other system. You can move on for the time being.
Okay.
Right.
Over to you, Nilanjan.
Yeah, sure. So as I was mentioning, probably this recommendation is stemming from the SEBI listing regulation, where they already have a similar kind of approach. One aspect which I thought I will brought to everybody's attention is that there is always a debate that when you give emphasis of matter in the auditor's report, is that an adverse remark or a qualification? Because there could be certain very critical aspects on which the auditor is giving an emphasis of matter. In my personal view, when we're talking about qualifications or adverse remark, it is important that we align with the approach which is there in the standards of auditing. And when they have referred to a modification, they would normally refer to qualification, disclaimer, or an adverse remark. So an emphasis of matter in the auditing world is not considered as a modification in the auditor's report. And hence, I feel that that should not be a matter of consideration when it is there, when you are reporting here.
Because in EOMs, basically, it's not that, there is a disclaimer or a qualification. It's just an emphasis.
Exactly.
So while it's a matter which concerns the auditor, but it's not affecting the overall opinion of the.
Correct.
I agree.
I think I'm already.
Sir, you are not audible.
Not audible. Then there seems to be something wrong with the connection.
So maybe if you want to switch off the video, maybe the audio quality will probably improve.
Am I audible now?
Yes, sir.
Yes.
Yes, sir. Yes, sir.
You see, the first point that I was trying to explain is that it was discussed that most of the diversion of funds which have taken place has been through the subsidiaries or the joint ventures. So probably that has been one reason why some kind of a control over the subsidiaries of the parent company auditor has been brought in, very frankly. And so far as this auditor's qualification part is concerned, it was discussed at length whether there is any possibility of standardizing the auditor's qualifications. I think that has been a matter of debate. And I don't think that it will be possible to standardize the auditor's qualification. The language of the auditor's qualification cannot be standardized under any circumstances. But if you all remember, prior to 99, that is 1999, before the institute actually came up with an amendment to the statement on auditors' qualifications, what the auditor used to do was that one will give, I can quote you one of the examples of an Himachal company. The auditor gave about 180 qualifications, and after that, subject to above, it shows true and fair view. But then, under Mr. Chhajar's presidentship, I still remember that we discussed this particular point and we said it cannot be done. If the profit figure is getting converted into a loss or loss figure is getting converted into a profit, in that particular case, the auditor must necessarily say that it does not show true and fair view for that matter. But unfortunately, when 705 has come in, because it's more principle-based rather than rule-based, it does not prescribe that. And in lot many cases, what has actually happened is that even after giving severe auditor's qualifications, the auditor does not give an adverse remark. He says that this is the total impact of the auditor's qualification, but he does not go on to give an adverse remark with regard to the overall true and fair view position. I think this has been one thing which has been weighing upon the mind of the various law framers or the various people, various stakeholders, and that is why probably this change has come in. So more than a SEBI document, I think the reason why this has come in is that probably people feel that not much of emphasis has been given on the total of the auditor's qualification and its consequential impact on the true and fair view which is supposed to be depicted.
Peshwan, Anklesharya, you are here with us. Peshwan.
Peshwan, you're on mute. Manojji, he is on mute.
I think just watch out. He would come in. Just spoke to him. Mr. Robin Banerjee.
Hi, Manoj.
Yeah, hi, Peshwan.
Sorry.
Welcome. I would just like to acknowledge Peshwan has been partner of the firm among the foremost, very old firm. And besides being a CA, also ICAI, CA England and Wales, and looking at the international best practices and part of think tank for over a decade. Peshwan, your views on the proposals and the recommendations and your expectations on how the company's act should evolve, what better practices are required?
Sure. So thank you so much for the introduction, Manojji. I'm a partner of Sorabas Engineering Company, and it's been lovely joining the discussion. See, I'll just briefly touch on this auditor's qualifications remark, because that is something we come across a lot in a varied number of companies, whether they are small companies with just a few crores turnover, or even larger companies which runs into hundreds of crores turnover. Now, pertaining to auditor's qualification, I think we all agree that you cannot standardize a qualification at all. Having said that, what Mr. Amarjit Chopra said is very true. You also cannot give pages and pages of qualifications and then turn around and say it gives a true and fair view. But let us understand why auditors say it is a true and fair view, because there's a lot of pressure from the management, and especially on SME auditors. I mean, a larger firm can always push back against management pressure. Many SME auditors are so scared of losing the assignment that they turn around and say that, okay, I've given all the qualification. I believe I'm protecting myself in the qualification, but I don't want to say it's not a true and fair view, because tomorrow the management will throw me out from an audit. Now, that is something I think the auditor needs to sit down and decide what is more important for him. Is keeping the client more important for him, or is keeping his independence more important for him? In our own personal case, we have let go of certain clients where we believe we could not continue. Because, I mean, the client wanted a clean report where we could not obviously give a clean report without severely compromising our independence. But maybe some other SME auditors may not be willing to do that. So as Mr. Chopra said in the past, there has been cases where, and it's a matter of perspective. Like what I may believe is a qualification that warrants not giving a true and fair view. Some auditor may say that, no, this is a qualification, but I still want to write true and fair view. Today, in most listed companies also, I don't see really auditors turning and saying this does not give a true and fair view, even though they put a qualification on the same. So, I mean, that is one point regarding the qualifications on the thing.
Robin, I can only say one thing. This situation is no good at the bigger companies also, bigger firms, and situation is pretty bad at the smaller companies, firms. I can tell you bigger are the stakes with the bigger firms, so they are unable to say that it does not show true and fair view.
Yes, Mr. Chopra.
But believe me, I can tell you that there have been cases where the entire net worth gets eroded by just one entry.
Yes,
and I give it as a matter of qualification, but I still say that the balance sheet shows true and fair view. So I think those have been the cases which are there in the minds of the regulators. And probably now, more than the interest of the client alone, I think the interest of the various other stakeholders is coming to the forefront. That we cannot ignore. And I think this entire bill, if you ask me, to a very large extent goes on to strengthen the position of the auditor if he wants it to be done. And let's hope for the best as the time moves on. That's all I can say.
Yes, Mr. Chopra, I totally agree with you that it is going to strengthen the position of all other stakeholders. But unfortunately, as I said, you're very true. Obviously, a bigger firm, a bigger client, more money goes away if the client goes away also. Now, we have seen certain big fours resigning or moving out where they believe that they were not able to either service the client while protecting the interests, or, I mean, the client themselves have told them to move on because they believe they were not able to cope with the demands. I think eventually a balance has to be struck between all stakeholders, the client, the auditors, and other stakeholders in the company itself also. Because today we are not working only for the management. As you rightly said at the beginning also, somebody said we are working for all stakeholders. An auditor today, even though the audit report is addressed to the board of directors or to the shareholders, it is not just them. Everybody is looking at, especially the larger the company, more the stakeholders also. And in varied ways, not just financially, stakeholders.
Thank you.
Thank you.
I want to make a comment here. Matter is quite serious. I think this whole matter of auditors report is a matter of existence of the chartered accountants community as a whole. The society does not accept anymore. Please try to understand, society does not accept anymore that a CA will say it's a true and fair. Please understand the society is trying to get from us a true and correct report and not a true and fair report anymore.
Yes,
if a fraud comes out, the first question, and the fraud keeps coming out, the first question which comes out, auditor kahan tha? Auditor kya kar raha tha? Why has NAFRA come? Because we have failed. We as an institution has failed the government. We as an institution has failed the society. And therefore NAFRA has come. Now NAFRA has been strengthened in this recommendation. To my mind, that's very good. So having said that, I do understand as an auditor, it is very difficult to put in a format as to what the qualifications are. But if we put our heads together, at least the financial implications can be put down. If there are 50 comments and the financial implications are 20 of them, if I can highlight in an Excel spreadsheet, these are the lines, this is the minus or plus of it, and with a comment on the right-hand side with remarks, there is absolutely no harm. We cannot now absolve our responsibility. And if we say, Jaise chal raha tha, chalega, we are not going to go abide by this, our profession is under threat. Someone is going to then audit on our behalf. It could be the government, it could be the other institutions. So to my mind, we must take these recommendations very, very seriously. And in fact, we must do a little more than what is being prescribed so far. We have to get the society's confidence back on us. Thank you.
Yeah. Mr. Robin Banerjee, I totally agree with you on getting the society's confidence back. But as an auditor, I mean, I have been auditing for the last, 16, 17 years. And I can assure you there's only so much an auditor can do to stop a fraud or to avoid a fraud. I mean, eventually the management also needs to be on board with the auditor. Unless you really, and with the current audit fees, I'm very sorry to say, I don't believe any of the companies in India really pay you enough as an audit fee to give a true and correct view. So I mean, there are two sides to every coin. Yes, the society does accept, or rather wants, I don't say accept, rather wants a true and correct view. But what is the cost involved in giving that true and correct view, and how many firms can really afford to give it that? I mean, that is something also the government needs to take up. And then, as somebody said, then you keep the audit fees also commensurate with it, no? Because then you hire forensics, you hire specialists, you get those people in. Today, if the audit fees are only 15 lakhs, how much am I going to? I'm not going to hire a top level forensic guy to go and deep dive into an audit fee of 15 lakhs. I can't afford to. And no firm is going to go out of pocket. I mean, there's no question of it. I mean, you'd rather than shut the firm and be out of business. So, I mean, that is something that the government and all stakeholders also need to understand. If you want to, I mean, see, audit fees are pretty good abroad if you go to see. Because I have companies that are abroad also. They're pretty good abroad. Then why are Indian companies hesitating and saying, no, auditor ko itna hi karne ka hai? Or why is even the government companies also saying, you're auditor? I'll give you an example which I know. LIC is one of the biggest institutions in India. Till around 15 years ago, LIC's statutory auditor's fees was not even 5 lakhs. Now imagine trying to say I audited LIC for 5 lakhs. Then what are you going to do during 5 lakhs? So I mean, that's where I would like to conclude my discussion on this topic.
Very well.
Hand it over to somebody else.
Oh, hello. I am Narendra here. But the fees, when the fees is offered, the auditors are accepting. No, fees cannot be the excuse that you don't do the work.
I am not saying that's an excuse, sir.
No,
I am saying that.
Here, you cannot do. You have to do the work properly. And if there are any qualification adverse, this recommendation is very, very important, because on the basis of the balance sheet, somebody else will lend money also. The banks will lend money. So many people will depend on so there are so many stakeholders. So you have to be clear. Either you sort out the remark qualification before finalizing, or if it is not sorted out, be clear. Yes, these are the impact. So I think this recommendation is really a good recommendation in the interest of the larger stakeholders. Yeah.
Like to acknowledge Mr. M. Narendra is on a board of several companies, including Adani Group, and has been.
But उन्होंने बताया, because the fees is a subject where we cannot have excuse. This is in the interest of the various. I think Amarjit Chopra also clearly mentioned. Either it has to be true and fair, or if there is a remark, what are those remarks and how that has been impacting on the accounts. That should be clear. Am I right?
Agree with you on that point.
Yeah, very good point. I would just like to mention here, particularly to Mr. Amarjit Chopra, you have been involved in the committee deliberation. Companies Act, right from inception, always had a separate provision for audit, special audit and investigation. Always. And audit was always meant to be true and fair. Now maybe society's expectations are changed. it is maybe on that investigation and special audit provision by MCA was sparingly used or hardly used. It is only when IBC came into the picture, forensic audit became a glamorous profession and forensic auditors were appointed. Why not? I would like Mr. Amarjit Chopra to respond. This special audit and investigation of companies' provisions are always there. So why not an engagement of FRRB with the MCA to see why not special audit of 200 companies? Maybe with a special audit fees, so that true and fair, which was a hallmark of audit for centuries, should continue. Otherwise, as Mr. Robin Banerjee said, there is no option. We had to meet the society's expectations. So then true and correct expectation is there. But whereas FRRB, can it do something better? Can MCA invoke provisions of that investigation and special audit? And also, ultimately, it is a time factor, quality factor, and auditor's objective, and the fees are a function of that. So it can accordingly evolve. But the special audit versus true and fair audit was the basic principle and substance. Whether that should continue or we are moving to a next stage of meeting society's expectations, because there is a cultural change among stakeholders. There, people get easy money through hacking maybe a digital platform or maybe the banking transactions of audit, hacking or frauds are becoming much easier. And because of huge volumes, it takes time to detect. It is not impossible. Yeah, Mr. Amarjit Chopra.
Manojji, I will only like to say, number one, I may not tend to agree with Robin that we are moving towards from true and fair to true and correct. It will never be possible. I think we have to change public's perception also to some extent, which Institute has not been able to do, as to what the audit actually constitutes. Even if you consider a case of a dye or mold, now whether mold will actually produce 50,000 units or it will produce 40,000, it's only an engineer who can estimate and can tell me. So I can only, the depreciation itself is only an estimated figure. There are certain things which come from the estimate. So true and correct will never be possible. Let's be very clear about it. But yes, there are certain benchmarks within which we should be living. That I'm very clear. And if we can actually bring in the qualifications to the extent that we are able to identify and we can say that this is the amount of the qualification, that will be very important. And I am very clear on one aspect, that if the total impact of the auditor's qualification is that my profit is getting converted into a loss, where is the question of saying that the profit and loss account shows true and fair view of the profit? I think that is absolutely ridiculous. And similarly, if the entire balance sheet gets changed as a consequence of this because of the qualifications, I think we should not be feeling shy to give the adverse opinion also in those cases. And there could be certain cases which will be involving some kind of disclaimers. Because if certain information is not available to me, it is not available to me under those circumstances. So to that extent, it will not be possible to quantify. So saying from true and fair to true and correct may not be feasible, but yes, from a true and fair view to a far more true and fair view is going to be one of the possibilities. That's the way I look at it. And as you said, FRRB combining with the MCA for the investigations, etc. I will only like to say that this is one of the possibilities which can be done. But FRRB itself is able to do about maybe 75 to 100 of the cases every year, not more than that. The way the situation stands today, maybe in the days to come, it might be okay. My humble submission is every time we take the blame to the auditors. Are the ROCs sleeping? Are the registrar of companies not responsible for it? The balance sheets are all available with them, and whatever is the state of affairs is available with them. It is unfortunately the auditors of the various companies, auditors of the banks which have been bearing the brunt of the attack. That is also most unfortunate. I can give you one of the cases, and a total banking exposure of 1,700 crores. the average sale realization of the product is 1200 to 1300 rupees per kg, and the work in progress has been valued at 2300 rupees per kg, and it is contained in the note sheet of the banker. Why the loan was given? Are we funding the losses of the company? I think each one of us is responsible somewhere or the other in the entire process. So merely blaming the auditor is also not justified. So I am also trying to defend the auditors to an extent, but at the same time, I will say a country which has an NPA level of 8 lakh crores, without including the figure of 11.50 lakh crores of the agricultural advances, which each of the banker knows is an NPA, but it is not being classified as NPA. Look at the Mudra loans, the way these have been given. Are these not NPAs, but are these being allowed to be classified as NPAs? So I think each of these sections of the society is responsible for this mess. But somewhere or the other, auditors are getting all the blame. I fully agree with Robin that today, if a fraud happens, everyone starts asking, where were the bankers? The directors, where were the independent directors? Look at the ILFS for that particular matter. What has happened to any of the independent directors in the ILFS main company? Nothing has happened to them. That's the most unfortunate part. What has happened to the independent directors in Satyam? Nothing has happened, but the auditors of the Satyam has been debarred for the lifetime. That is the unfortunate part. I think somewhere or the other, that is why in NAFRA and NFRA, power has been now given to proceed against the directors also. But the power has been given to proceed against the company also. And I welcome that particular move to a very, very large extent, because that is going to provide us the cushion.
Chopra ji, I just want to make a comment for all of us to consider, if you agree.
Wrongdoings might be avoided. That's what is going to happen.
Chopra ji, your points are absolutely right that an auditor can never make a true and correct. However, I'll just spend 2 to 3 minutes on this, sir. That we have to overarchingly think that what is the future of a chartered accountants community? What is the future of this auditing community? The society is unfortunately expecting a true and correct. I'm not saying that we can do a true and correct. In view of that, my submission was that the current recommendation, and you have been part of the committee, that you guys have made, saying that as some sort of a summary of all the points on where there are issues with regard to accounts must be made up in a legible format is absolutely appropriate. This will make the auditor's signing more transparent. And whoever is reading an auditor's report or a balance sheet and profit and loss account should be able to come out with these are the type of risk. 70, 80, 90 points nobody reads, and this English is of course most of the time is incorrect, and therefore no one can make out what is the auditors are saying. But if you put down a value around it and a remarks column, I'm sure we will be better off. It is a time when we as a community must sit through and think through as to how we are going to save ourselves from extinction in the future. And I'm really clear, sir, that if we don't do something shortly, we shall be extinct. We can continue to say what we want. True and correct is not possible, but let us now go towards something which is more true and correct than towards true and fair. And that's my humble submission to all of us together. Absolutely. And therefore, the recommendation amendment is very, very good. Very, very good.
Absolutely agreed, Robin. Absolutely. I have been a part of the committee and I have agreed to all these suggestions, very frankly. Rather, some of these suggestions could have been mooted also. Because I am also equally worried about the profession. Otherwise, we will become absolutely irrelevant to this society. We don't wake up to the call now. That I am very, very clear about.
Mr. Kannan, you are there with us?
I am there.
Mr. Kannan.
I am there.
You are a user of the financial statements, looking at performances of top companies and participating at board level. Would like to have your views as a user and view from the top. And what is your looking at the changes? Do they meet your expectations and the way ahead or could be better?
Like I was always telling in the earlier meetings also, our generally what happens is that regulation catches up with what is happening in the environment. So 95% of new legislation, what we see, regulation, this is in response to what has happened in the market. So if you go through some of the recommendations in the report, especially now we have moved towards a lot of startup listing, and we already Indian companies, I think 1 or 2 companies already got listed, that SPAC listing in USA, fractional. So many of these concepts are still, even though we have one of the best regulatory systems in the world for stock markets. In fact, people say that India has got one of the best regulatory systems, but still some of these concepts are yet to come to India. So that way I find this report is trying to address some of those issues. And coming to, I think there was a big debate about relevance of auditors and numbers and all that. I can tell you another 15, 20 years down the line, all these debates will not be there. Now, what will happen is that most of us would have already moved towards accounts finalization, everything through IT. So that is going to happen. And of course, we also have these concepts coming like artificial intelligence, and so people can make out from the report also. They can, you can use this software to see what is inconsistent in the report. Already, I think it is happening. So the profession will become, it will be relevant. There is no doubts about that. But only thing, the role of the profession is likely to change. Like Mr. Manoj mentioned that there are companies which have 250,000 subsidiaries and all. And as you're all aware, all over the world, there is a movement towards simplification of corporate structures. So not only in India, we see this happening in US, Europe, where companies are operating in US and they don't pay a single paisa as a tax. So now what we are seeing is that transparency is coming more and more. And especially after this OECD principles of the BEPS and all, once it comes, we are going to see more and more transparency. In fact, the question of interpretation, today what happens is that an item we can interpret 10, 12 different ways, and we can show a different profit. I can tell you even that is going to be uniform going forward. Not now, immediately, maybe 5, 10 years down the line, what you will see, for each item, how you are going to treat, even that will be very well defined by authorities. They will say that there is no, suppose today we spend money on advertisement, on IPL, we can write off in 1 year, write off in 3 years or 5 years. So even those type of things, I'm going to see that these are going to be very well defined. That is what is going to happen, because the systems are becoming more and more complex. So you cannot have so many line items which have a different interpretation. So what I see, actually, the paper brought out by MCA is one which is trying to catch up with what is happening today. And of course, we should not be left behind. And also now we have become the 3rd largest startup capital of the world. And many companies are ready for even SPAC listing or issue of fractional shares. And now we are talking about very large projects in hydrogen, very large projects in chemical, electric vehicle, chemistry. So all these are going to come, which means we are still not ready for that. Even though we have the best system, some of these concepts are yet to find place in India. So I'm happy that this report is trying to cover some of these areas. And of course, when 2 auditors go and inspect a book of account, obviously there will be 2 points of view. But like I said, even this question of interpretation and all, it is there right now. But my feeling is that 10 years down the line, there will not be any scope for even question of interpretation. There will be very clearly defined rules. Thanks to IT systems, where with the help of IT, we will define the systems, rules, and accounts will be prepared according to that. And I believe when you adopt IT also, it's easy to make the audit trail easier. So that is what we are going to see. But it is in the distant future. In the next 10 years, and of course, we have to live with these systems, and we will see such new rules emerging from government. And I can tell you 95% of the time, it will be in relation to what is happening. And of course, 5% government also takes some kind of proactive measure. This is all what I wanted to say. Thank you. Thank you, Mr. Manoj.
Would you like to respond?
Manoj, can we continue with the presentation?
Yeah, I think so.
And Kannan, recently when some report came, one lady as well as another, I think, partner of some such a startup from Singapore and all, they had to resign because faulty accounting.
Yeah.
So your point, no, the startup or new technology company, all that, there is a risk of faulty finance, or what you call, no, they are maintaining the faulty accounting policy, and they have to, I think, regulator, or they have to resign on their own.
Oh, sir, this is true even for small and medium companies.
Yeah.
And startups. Generally, what happens is the small, medium, and startups. Generally, these are all started by technocrats, those who have expertise in the domain, who understand the domain very well. And generally, you know that you are in a banking, and you saw how many sick units were happening mainly because these people did not know finance. They did not know how to manage working capital. So their basic knowledge of finance, as well as their basic knowledge of accounting, that we saw in that this Grover case also. We saw how much of fraudulent reporting they have done. So this happens many a times. It happens by people not competent. But of course, like in the case of Grover, we saw people were really devious and they have done it. So if you ask me, with the view to show very good performance and with the view to get a faster appreciation of their investment, people might cook up accounts, especially startups. So that is one I think even our regulators have to take note of. Because now we are talking about a lot of startups, and government is really gung-ho about startups, and so many are coming. So that is one area I think our established auditors, accountants can also guide these companies, or they should be asked to, especially if they are given money by government and a startup ecosystem, then I think the government should create a system by which these companies are adopting best practices and they are not misreporting.
I agree.
Very important point on the startup Bharat Pay. Twitter is free speech. That's what Elon Musk says. And it gives instant response, sometimes emotional response from the past CEO and from the current CEO. And then they delete their tweets. Ultimately, it is the differences among the management. Maybe private equity has a role to play in encouraging some of the KMPs. But what is the role of the auditor? What is the auditor doing? Is the auditor sleeping? They need to respond. I hope they are not having a comfort position with the previous CFO and they resign without citing the correct reasons for resignation. Some of them are known to say, we are preoccupied with other engagements. Some of them, they do it. But the reasons at this presentation we have talked about, the reasons have to come in. The reasons of non-cooperation should also mention also very clearly in a simple table. So the user, like Mr. Kannan, who is looking at performance of various companies on a single page, Mr. Banerjee also mentioned, rather than 30-40 pages of so-and-so notes. Communication should be very, very clear. And this example of a startup, a very evolved startup, Bharat Pay, Grover, is essential in the context of auditor. I wonder so far whether what is the news and what the auditor is doing. That report, it may come in public domain through regulatory filing, being not a listed company, but would be quite interesting to watch. And it is good MCA is looking at so-and-so things and also enabling listings of.
Manojji, Abhi, we'll continue with the presentation. Next.
Nilanjan.
Yeah, thank you. Thank you. This we can quickly cover. So there was no provision at present with regard to the cooling off period when the auditor wants to become the non-executive director, managing director, or whole-time director in the company audits group entities. So the committee felt a cooling off period should be introduced so as to maintain independence and avoid conflict of interest. So in that regard, the committee has proposed a mandatory 1-year cooling off period from the date of cessation of office as an auditor, post which the auditor can assume the role of a director in the auditee company. Now, as I think Mr. Kannan also mentioned about the new global practices, the committee has taken a note of those practices and they have introduced some of them in their report. Now, moving on, the first one which the committee is hoping to introduce is on the special acquisition companies. These are in short known as SPACs, and they are in quite rage as far as the international paradigm is concerned. So in short, what is a SPAC? SPAC is a type of company that does not have any operating business and has been formed with the specific objective of acquiring a target entity. And that the target entity will obviously be an operating entity. Now, if the business combination or the acquisition does not happen within the stipulated time frame, then the entity will be liquidated and the money will flow back to the owners of this SPAC. As far as the Indian regulatory framework is concerned, the GIFT City or the IFSCA, they have recognized the listing of SPAC in the IFSCs, right? So there is some kind of a framework which is already there. As far as the global phenomena is concerned, SPACs are regulated across multiple jurisdictions, example UK and in the US. Now, it will obviously help our overall framework from an Indian regime to have a more operational and a more steady growth of SPACs in India. Now, what did the committee recommend? It said that there has to be an enabling provision under the Companies Act 2013 to allow listing of Indian SPACs, not only in global exchanges, but also in Indian exchanges. Okay, so what it also said is that the provision on relaxing the requirement to carry out before strucking off, that should also be incorporated. What is very key to the operationalization of these requirements is that under the Companies Act 2013, there are already sections which talks about listing of Indian entities in overseas stock exchanges. So those sections are there, but they have not been commenced. So to enable the listing of SPACs outside India, it is a precondition that those sections are also notified. Okay, so now let's see how does this SPACs operate. It's just a pictorial representation. If you can see, there is a SPAC which will go for IPO. It will find out a target entity. It will negotiate and do its due diligence. If the deal goes through, it will go for a shareholder vote, and it will be the merger or a share swap of the target entity. If it does not go through, then I will go back to the drawing table. I will go back to search for a new target. If still it does not happen, then I would end up dissolving. So this is a typical life cycle of a SPAC. Now, in India, as we all know, SPACs are at a very nascent stage. A couple of only entities have been able to make a mark through the SPAC route. Now, as far as its advantages are concerned, there are certainly advantages in the SPAC route. The first being speed, the time or the entire mechanism that you go through from a normal IPO as compared to SPAC, that is quite faster, and hence this is one of the most preferred mode of listing in the overseas market. Also, from a price determination perspective, SPAC acquisitions are conducted normally on a predetermined price. As a result, there is a less vulnerability in case of risk of volatility in the public market. This kind of a setup is more suitable for emerging technology companies. The most important reason is their true potential or value may not be apparent to the public investor at present. Now, from a sponsorer perspective, that is the entity which will float the SPAC, it can obtain this stake at a very nominal consideration, and hence it is very lucrative in that sense from a investor in SPAC perspective. Now, what are the benefits to the target? Obviously, the most important benefit is the reduction in time as well as the associated cost incurred. What I also felt necessary is that I put out what could be the hurdles at present, considering we are still at a nascent stage. Now, as far as the regulatory hurdles are concerned, from a RBI and a FEMA perspective, there has to be an enabling provision, because ultimately an Indian entity or an Indian person would hold a significant stake in an overseas entity. So that's where maybe enabling provision has to be inserted under the RBI framework. From a tax implication perspective, it will obviously depend on the factors. Most importantly, what is the residential status of the individual? Is he a resident or a non-resident? Is it a company or an individual? So that will ultimately determine the taxation implication. It is vital that we also have a regulatory clarity on the SPACs transactions, specifically in the income tax framework. Okay. Moving on to the next globally accepted norm, which the committee felt would be important to be introduced. Those are with regard to fractional shares, restricted stock units, and stock appreciation rights. These three are very well known in a global phenomena, especially Canada, Japan, and US. Under the Indian framework at present, the IFSCA permits the fractional shares in a regulatory sandbox regime. However, there is explicit prohibition on RSUs as well as the stock appreciation rights. Now, again, from a global benchmarking perspective, the committee felt that enabling provisions should be introduced, and these globally accepted norms should be introduced in the Indian regulatory framework as well. The committee, however, noted that as far as the fractional shares are concerned, they should be permitted only in demat mode. And as far as the listing entities are concerned, the committee would be consulting with SEBI as well before they give their final view. As far as the RSUs and stock appreciation rights, the committee recommended that the scheme requiring issue of further securities must be allowed only through a special resolution of the shareholders. One of the very important recommendations they made was that the company should be permitted to obtain omnibus approval from the shareholders so as to avoid fresh approvals at the time of each and every allotment. The shareholders obviously will not be required to give approval on settlement or situations where the stock appreciation rights and RSUs are converted into securities. So that's a broad framework which the committee said would be important. Now, moving on to the next area on strengthening corporate governance. As we all know, certain listed entities are required to formulate a risk management committee. Now, from a role and responsibility perspective, the committee is required to look at the risks which emanate from a particular entity, basis the environment, basis the jurisdiction that they operate. At present, under the Companies Act 2013, there is no explicit provision on the formulation of risk management committee. However, there are certain requirements which is there under the Companies Act framework. For example, the board report of the company must contain a statement regarding the development of a risk and risk management policy. Similarly, the audit committee is required to evaluate the risk management system. Now, again, to align with the regulatory framework in India, the committee felt that it is important that the risk management committee should also be introduced for specified class of companies. And what would be the specified class of companies that will be described when the rule making is at the final stage. Again, the committee felt that there has to be some clarity on the independent director's tenure. So what the committee observed is that there have been instances where the previous tenure of an independent director is not considered. For example, the independent director was already an additional director. So the committee noted that while assessing the entire tenure of the independent director, his pre-relationship was not considered. Similarly, what the committee also noted is that if an independent director is appointed for a brief period and he is again resigning, those two are not considered when we are looking at the overall tenure of the independent director. The committee noted very seriously that it is very important that the tenure which is prescribed under the Companies Act 2013 should be strictly adhered to, because it actually hinders the independence of the director itself. Now, the recommendations are concerned, the committee very clearly said that the terms of 5 years, which is there at present under the Companies Act, should be counted from the date the association with the director exists. So, for example, if the director was already an additional director, while computing the tenure of the director, those should also be considered. In no way the tenure of the independent director can exceed 5 years in a single term or 10 years in case of 2 consecutive terms. The committee also stated that irrespective of the resignation before the expiry of the term, that would also be considered as conclusion of one term. And as an overarching principle, no individual can be appointed for more than 2 successive tenures, and there has to be a mandatory cooling off, which the law already prescribes as 3 years. Moving on to independent directors and their pecuniary relationship. So the company,
Nilanjan, that 10 years and cooling period, all that is okay. But
Sure.
Is it only for listed company or unlisted also?
So the way the recommendation is, so they are talking about companies in generality. So they have not talked specifically about listed entities, but yes, since independent directors would mostly be required to be there for listed entities and for large public interest entities, I think that's where that will be more appropriate. Yeah.
I think since the report has been released by Ministry of Corporate Affairs, that will cover even unlisted companies. The SEBI deals with only listed companies.
Yeah.
So when it forms part of the MCA report, they cover every company.
Right, right.
But then
actually,
in Companies Act, independent directors requirement is not compulsory for all the companies.
Exactly.
There is certain thresholds.
Correct.
So therefore, I think the recommendation is not to revisit those thresholds or expand the requirement, but to stricten the, to kind of have more stricter guidelines for independent directors.
I agree, Santosh. I don't think they are trying to change the criteria of companies for appointing independent directors. They are only saying wherever you have appointed independent directors based on the existing requirement, you look at these factors when you are assessing the tenure or the pecuniary relationships. Right.
I have one specific point on respect of independent directors, and particularly would like Mr. Amarjit Chopra to respond if that has been considered while giving the recommendation. We had a recent incident related to independent collective resignations in the case of PTC Financial Services. Now, maybe company law committee, when it discusses the deliberations, these things happen once in a while. So are these issues addressed? Now, what happened here, a solution came indirectly from the regulator. The independent directors of the promoter company PTC were appointed on a temporary basis on PTC Financial. So there is an appropriate board, of course, subject to re-election or reconfirmation. But these issues happen about collective resignation. That means it is like a person is walking away and giving the key to the thief. That's what they talked about, irregularities, but independent directors need to hand over to somebody, and somebody credible, and not to the people on whom aspersions are cast. Now, this is a very vital evolving development. Nilanjan, have it is being addressed, or should there have any changes, something from you and something from Amarjit and from others on this issue?
I don't think, Manojji, that this has been addressed, very frankly, because it was not before the committee in any case. This, so far as the, hello?
Yeah.
So far as this provision is concerned, it only covers where people were actually trying to take advantage of the non-executive director period or additional director period by actually having a fractional period as additional director period and then 2 terms of the ID. They said nothing doing. Wherever you have been appointed as an additional director and then independent director, your total period cannot exceed 10 years. So far as your point of collective resignation is concerned and handing over the keys to thieves are concerned, you see, if I continue to be independent director knowing fully well that the company is not functioning well and I am not being shared the information which I should be shared, why should I continue and continue to be held responsible for all the acts that the company commits during that particular period? I think this is well within the powers of the independent directors to resign either collectively or singly, and this should be actually maintained. Rather, this should become the moment an independent director resigns, and if he has given the reasons, these reasons should be a ground for the SEBI or any other regulator to look into the conduct of the company, rather get the investigation conducted as you are saying. Why only investigation for the financial purposes? Investigations can be conducted even for the governance purposes for that matter. So I think this particular issue has not been touched because at least I for one will always like to feel that if the independent directors are resigning, they are having a serious concern about it, and that serious concern must be addressed by the regulator, concerned regulator, by getting the investigation conducted.
That's a good point. I hope in the further deliberations it is addressed. Now, a point came in several companies. In financial companies, RBI got power to appoint an administrator after a long procedure, and it used the power in at least two of the cases, maybe three cases so far: DHFL, Reliance Group, and Shri. And here in PTC, financial PTC, incidentally, our regulator, I consider it among the best in the world. They are engaged and trying to find some solution. But here there is a promoters company, independent directors have come on board of PTC Financial. What in such companies in future, there is no promoter company. What happens to such companies? Should there be a provision of administrator? So ultimately they are welcome to resign because they have to protect their own position because they are asking questions, they don't get sufficient information. But the handover whether it should be done to a kind of an administrator or a special officer appointed by any of the regulators, whether it is the SEBI for listed companies or whether it is MCA or some RBI or some central body. So in future, if any companies it happens and promoter companies are not available to step in, the solution should come before further money gets diverted. So here concern is of the funds. Funds should be managed or safeguarded by the board, which has a fiduciary duty towards all the stakeholders. Of course, whoever is support with the support of the principal officer and a manager. Yeah, sure. Yeah.
We need to appreciate one thing. Even the continuance of the independent director on the board will not be able to prevent the diversion of funds. Because after all, who signs the checks? The checks are signed by the executive directors. So why should I continue to incur that liability by continuing on the board? So I think whether it is a promoter-based company or it is a non-promoter-based company, I don't think that the independent director should continue if he has reasons. But at the same time, I will like to say the regulator cannot appoint an administrator without an investigation being conducted. Simply because 2 or 3 or 4 of the independent directors resign and make a particular statement, and then the administrator is appointed on the company. I don't think that's also the solution. Let the investigations be conducted by the concerned regulators. And if the regulators come to a conclusion, yes, there has been a serious breach of the governance, in that case, the administrator can be appointed, not otherwise. I personally feel otherwise, one of the independent directors getting antagonized by any of the actions and he goes and makes a public statement or 2 of the directors do it, I don't think that should be the ground for appointing an administrator in any company.
I completely agree with you, Chopra ji. Independent directors are supposed to remain independent and work for the minority shareholders. Here in this particular PTC Financials, they felt that the minority shareholders of their own interest is not getting covered. So they resign, which they should not have. Independent directors, by resigning, you don't solve the problem. You can actually solve the problem by being inside rather than being outside. But be as it may, it is not a case where any other action should have been taken. However, it is a wake-up call for the corporate as a whole, that what happens if all the independent directors resign en masse, which is what has happened for the first time ever. But because it's an isolated case, I presume the MCA and the Corporate Affairs Committee is not focusing on it anymore.
One more point on SPAC, which Mr. Kannan mentioned, and Nilanjan has highlighted the whole cycle, particularly from Mr. Chopra. When do we see a day, maybe 2 to 10% initially and 20% of the market cap of exchanges is having Indian companies listed as SPAC. Now we saw in the discussions one company, Renew, is mentioned, which happened, and now this is one of a fantastic provision. and which happened in actually the US, which is known for giving good valuations to innovators and entrepreneurs with a vision. Very good valuations. Here, of course, GIFT City is coming in. What type of discussions, deliberations happened on SPAC? Particularly, we see Uday Kotak had a presence in the committee, who is known for capital markets and creating value, and also looking at international benchmarks. SPAC, what is the expectation in terms of the India growth story and the participations? And when you think we'll have significant Indian companies, means Indian entrepreneurs and companies incorporated in India to be part of the market cap of companies, of exchanges?
Manoj, I can say that, as you said, Mr. Uday Kotak was a member, Mr. Siddharth Virla was a member. And in any case, Mr. Shalur Shah was also a member of this particular committee. And going by the discussion which took place around the table, I am very sure that the moment this particular provision is implemented, whenever the law is amended to bring in this particular concept, may not be in the first year, but maybe in the next 2 to 3 years, it will you will have the Indian companies being floated around. Because it is not that the Indian companies don't have the money. Let's be very clear about it. Today, we are flushed with the liquidity. Rather, the problem is where to park those funds. Very frankly, that is the kind of situation that the country is in. So let's hope so that in the next 3 years, you will have some companies coming in, so far as SPAC is concerned.
This is
after this Renew Power went for this SPAC listing, I know at least 10, 12 companies from India, they are interested in this type of structure. And now we know that there are very big projects coming in hydrogen, electric vehicles, and new technologies. I'm sure, like it was mentioned earlier, once this provision has been enabled, we might see in the next 2-3 years, 15-20 companies will show interest. But as it was clearly explained in the presentation, it has been created for a special purpose. In case they are not able to acquire companies, then whatever money collected from the investors, they have to be paid back. So most of the time what happens is that people go create companies once they identified a target for acquisition. So that is what will happen. And of course, for all these electric vehicle, hydrogen and all, Indian companies may have to go and acquire companies from abroad, and in which case this structure will be very, very useful.
So excellent provisions, and one thing which comes out from regulatory aspect is in such companies, LODR, that listing regulations which is by the exchanges like BSE or NSE, which has most of the provisions for those audit committees, nomination committees, independent directors, they don't apply. The provision of the exchange like NASDAQ, they apply. And today we are talking about GIFT, the provisions for listing on GIFT City will apply. So we'll hopefully there are, of course, each exchange has its own benchmark. And when listings are there, the stakeholders know what are the requirements for that. But one of the welcome and excellent, in fact, this provision is compelling many of the stakeholders to see that this Companies Act bill is passed on a fast track basis. Of course, after appropriate consultation, approved modification with respect to a lot of professional issues, auditors, etc. But this SPAC, I hope they will, the bill will be tabled. Hopefully, this doesn't happen in India so easily. It should be tabled in 2022. I wonder what is the possibility of that, Mr. Chopra?
हाँ देख लेते हैं ना, इसको खत्म करते हैं.
Nilanjan?
They continue? Yeah. Okay. So moving on to the next one on the pecuniary relationships of the independent directors. This is again more from a removal of ambiguity perspective. So what the committee noted is that people are taking a view that once an independent director has ceased holding his office for 2 consecutive terms, if let's say is an eminent person, for example, a lawyer or a consultant, that law firm or the consultancy firm is barred from providing services to this particular to this particular entity. So the committee looked at this particular notion, and it clarified. And it clarified that the legal or the consulting firm can continue to render its services as long as the services being rendered is below the maximum threshold prescribed under the Companies Act. So at present, the Companies Act prescribes a threshold of 10%. So the committee stated that as long as those thresholds are being complied with, even though the independent director has resigned and is within the cooling off period, the legal or the consultancy firm can continue to render services. The next important thing is the committee also recommended that in light of maintaining transparency and reduction of conflict of interest, this 10% threshold should be brought down to 5% as far as the legal advisors and consultants are concerned. So in a nutshell, what I felt is that this particular proposal brings us more closer with the SEBI LODR requirements, which provides a similar kind of a provision for listed entities. Next, moving on to the cooling off period, the committee also looked at the provision where an independent director wishes to become a managerial personnel in the same entity. The committee noted that at present there is no prohibition or restriction, and there is no mandatory cooling off period that has been mentioned. However, under the SEBI listing regulation, there is a 1-year cooling off period, after which the independent director can assume the role of a managerial person in the same entity. Again, in the light of aligning with the listing regulation, the committee suggested that a mandatory 1-year cooling off period from the date of cessation of office should be introduced before the independent director assumes the role of a managing director or a whole-time director or a manager, not only in the same company, but also in the holding, subsidiary, or associate companies. Okay. Next on the agenda of the committee was to increase the digital footprint. We have already talked about the benefits of technology as a whole. So the committee also took that into consideration and made some very significant suggestions on increasing the digital footprint. This, I think, we all are aware. As far as the COVID disruptions were concerned, the ministry on a time-to-time basis, they have given relaxations on conducting the annual general meeting or the extraordinary general meeting through video conferencing or other audio or visual mode. There were also relaxations if the meetings were conducted through hybrid means, through a mix of physical meeting as well as virtual meetings. As far as global benchmarking is concerned, Singapore and Australia already allow virtual meeting if the adequate notice is given. Similarly, in South Africa as well as Japan, they, in their normal course, irrespective of being hit by pandemic or not, their legislation already provide virtual meetings as well as hybrid meeting. Now, the committee, considering the multiple benefits which the technology provide, the committee felt that these requirements should be enshrined in the legislation itself. At present, as you all would be aware, these were introduced by way of various notices and orders or circulars by way of ministry. Now, the committee recommended that a framework for conducting AGMs and EGM through electronic mode or through hybrid mode should be enshrined in the regulation itself. The committee also noted that where the company is opting for a physical or a virtual mode, the notice period for EGM should consequentially be reduced. Again, a significant step towards digitization. The MCA has also, the committee also recommended that certain registers which the companies maintain can also be digitized and can be maintained on an electronic platform. So if you would look at the present requirements, the Companies Act requires entities to maintain approximately 15 statutory registers under the Companies Act, which will include information related to company's directors, shareholders, loans, etc. Again, the company benchmark with the global requirements. In Singapore, there is already an electronic platform which requires companies to maintain and update information about registers in that platform. Similarly, Australia is proposing to streamline its digital platform, and they are planning to introduce a mechanism to view, share, and maintain business information in a digital way. The committee also felt that it is important from an Indian context, and it recommended that certain class of companies should maintain such register on an electronic platform in such manner as may be prescribed by the MCA. However, what the committee very clearly stated that even though it would be maintained on an electronic platform, the data stored would be constructively deemed to be in the possession of the company. So it might be a common platform, but as far as the data integrity is concerned, the company itself would be responsible. The committee also very clearly stated that no one, including MCA, would have access to such registers except in case of enforcement related situations where the MCA can direct the company to share the information to the investigating agencies. The committee was also cognizant that the existing data need to be migrated to the electronic platform, and that might need some time by the companies. So the committee also recommended that adequate transitional provisions should also be introduced in the framework as well. Well, that was all from my side. If there is any questions or some clarification, I would be happy to take up.
Hello.
Yeah.
Hello. Hello.
Yes, Manoj, we can hear you.
Hello. Yeah, it's excellent presentation. So many deep dive discussions, and there are some questions on a chat box.
Sure.
I think if any other panelists would like to see and address it from their perspective. Nilanjan, you can read out the question.
Yeah, I will read that out.
And also address it to any other panelist.
Sure.
And any difficult question or any important questions, Mr. Amarjit Chopra would certainly like to respond.
Yeah.
Because I have to leave within next 10 minutes. So if at all there are any questions for me, you can ask.
Yes.
Sure, sir. Sure.
Anybody can ask, put on their video, identify themselves, mention their name and qualifications, and can also post on the chat box. Every question will be answered. Nilanjan, can you start looking at the chat box also?
Yes, Manoj. So the first question, Manoj, which has come up is on the non-audit services. So I think Gaurav has asked a question that will non-audit services be applicable to network of firms also, because at present the committee has referred to only in the context of the auditing entity, but his question was, will this apply even to the network?
I can make out, Nilanjan, the question. You see, even our present code of ethics is very clear that whatever applies to the parent applies to the network also.
Yeah.
It is not possible that the parent will continue to do the, you can say, statutory audit and the others can do the
right, sir.
Other non-audit services.
Right.
So whatever will be applicable to one, it will be applicable to the entire network. Let's be very clear about it.
Right.
So far as that part is concerned.
Next question again, Gaurav had asked, but I think it is not very clear. He has said that are such disclosures applicable to all companies or public interest entities in case of auditors' resignations? So,
this will be applicable to all companies.
Yes.
All companies.
Right.
Because I can tell you there are thousands, not in hundreds. There are thousands of resignations which have taken place in the last 3 years.
Right, sir.
Particularly, this will be the cases of the shell companies. I can tell you that. So I think the government is very serious. You can't enjoy certain benefits at a particular point of time. And then whenever you want to move out, you can move out of the situation. That's not going to happen whether it's a small company or a bigger company. That situation, because as I said, one feeling has been there all through that most of the diversion of the funds which has taken place has taken through the small companies route only. The bigger companies have transferred it to the smaller companies, and smaller companies have been able to siphon off the funds there. And then, of course, channelize the funds wherever they wanted to do it. So you cannot take the excuse that it is a smaller company, so I can resign as and when I want. And in the case of the listed entities or public interest entities, it will be applicable. It will be applicable to all the companies.
Right, sir. Right. And so in that context also, maybe in the CARO 2020, they have also tried to look at the loan and intra-group borrowing in a much more detailed way, right? Be it in the context of evergreening or round-tripping.
Right.
Sir, may I put one question?
Please, on your video.
Yeah. See, Unmesh Narvekar. Sir, our first point is pending if you can answer. But in addition to that, so the point is really well taken. The change is constant. There is always evaluation process, and the laws are getting changed over a period of time as per the needs of the society and the economic changes. But if you see there is a change of perception, whether it is a change of perception of the government towards the chartered accountants or auditors, or it is somewhere we lack in the services what is expected by the society as such. Where is the gap? Can you highlight this point, please, sir?
I can only tell you that the overall perception of the chartered accountancy profession with the public is quite different from what we keep claiming, sitting in the various positions at the institute or in the regional council. Let me be very clear about it. Self-petting is no admiration. I think someone else has to come and pat you on the back. That's more important. And it's a mutual admiration club does not help, very frankly. It is the society which has to admire your services. I qualified in 1975, and today when I look at it, the period that has gone, much of the water has flown. And I personally feel that our dignity, overall dignity as a profession has not gone up. It might have come down. There are instances, you may say these are aberrations. These are not aberrations now anymore. Satyam could be an aberration. But is ILFS an aberration? Or Diwan housing as an aberration? What else you could describe as the aberrations to continue? Or even the Thappers group was an aberration? No, I don't think that every time I can go on saying that this is an aberration. Is this 8 lakh crore rupees NPA level, besides 8 lakh crore having been written off in the last 5 years, is it an aberration? Is ADG shipyard an aberration? No, I don't think these are aberrations. These are very serious issues. And then the society starts perceiving us in a very different way. It's not that we have not tried to convey it to the government. Every time that we go to the government, we try to convey our concern. But I think overall, collectively as a profession, we have to improve upon. Only the leaders cannot deliver. No leader will be able to deliver unless we collectively deliver to the society at large. I can tell you whatever is happening in the bank branch audit, whatever is happening in somewhere else, it's only because of our collective failure. I can tell you because if I start taking the things for granted, that this is my position and I will be respected, respect has to be actually commanded. It cannot be demanded under any circumstances. That's the way I look at it. And somewhere or the other, we have fallen short of the public expectations, fallen short of the societal expectations, fallen short of the government expectations. We have to improve our working so far as the audit part is concerned. I have always believed in one thing. People start comparing ourselves with the advocates every time. Advocate is paid to defend his client. We are not paid to defend our client. We are paid to defend the interest of the various stakeholders. I think that's the basic difference that we always forget. And a lawyer defends me individually, but when I am paid the auditor's fee, it is not for me that the auditor fee is being paid. The government has given me the statutory recognition to protect the interest of the various stakeholders, including the bankers, including the government, including the shareholders, debtors, creditors, everybody. I think that's the basic difference. So let's be very clear. Don't keep on blaming the leadership at large. I think this is we ourselves as collective, me included therein, who need to be blamed for all this.
So just one point of addition.
Mani is raising his hand.
Yeah, Mr. Mani is also
always a collective. It is tali ek haath se bachti nahi hai. There is a collective thing that is happening. Collusion is happening, and because of that, frauds take place. So why only the blame comes to the chartered accountant ultimately?
I said that.
Why it is not the other partners?
Gaurav, I said that. I said that in my earlier talk here only today. That unfortunately, these are the auditors who are bearing the brunt of the attack. The bankers will have to take the blame. The government authorities will have to take the blame. The directors will have to take the blame. Each one of the society has to, a member of the society has to take the blame. Let's be very clear about it. After all, the revenue officers have also to take the blame. Why only the auditor should take the blame? So, but that does not absolve me of my responsibility.
Yes, absolutely.
Frankly. Mind it, while sitting in the disciplinary committee, we come across cases where two directors are fighting, and once they start fighting, they start filing complaint against the member. Last 4 years at least, and when I was the president, we took the initiative. We started writing even to the MCA or to SEBI that these directors have done this, and you are blaming only the auditor. Why should not they be also hauled up? I think that is very important. And institute must do this and must continue to do it under all circumstances. Where the two partners are fighting and they have defrauded the revenue themselves in the earlier years, today they come and file a complaint against the auditor. Wow! I think it's fine that I will hold my member guilty, but then the authorities must hold them also guilty for that.
Yes,
I think that's very important.
Yeah, I think Mr. Mani had a question. Mr. BB Mani, yeah.
Yeah, I have certain questions. We are discussing about the joint
Mr. Mani,
auditor's responsibilities.
Introduce yourself from the perspective of a professional or corporate. Mention your qualification and the perspective so we can understand. Yeah.
As such, I'm a chartered accountant only. I'm practicing chartered accountant for the last 36 years and all this. Since my important question is like this, because there are various stakeholders, there are various regulators. When there are various regulators, shouldn't the committee suggest certain mechanism that all the regulators should share their views or share their information to the auditors, as well as auditors should share the information to the other regulators? Before, there are the certain things as far as the audit of the bankers is concerned. RBI audit is there, inspection is there, and all these things, but they don't share the information. What about that?
No, let's be very clear. If the auditor asks for the information from the banker does not refuse it. Unfortunately, the auditor has to ask for the information. But if you want the annual information of the bank to be shared with the branch auditor, it may not be possible because there are certain things which may not be capable of being going to public. I think there could be certain things which have to remain with the bank and the Reserve Bank of India. So if at all he asks about certain accounts that he is handling, definitely, I can assure you, I have been a branch auditor for a very long time. If I say that if any of your accounts has been commented upon by the Reserve Bank of India in the last year, or anything with regard to your branch which has been commented upon in the last year, they provide me. It is something that I have to start insisting upon. If I don't insist upon, it is not going to happen. But if I expect that SEBI will start writing the auditor that this is what is going wrong, I don't think it will be expecting too much from them.
Mr. Amarjit Chopra, I can just say one sentence about you. You are a great ambassador of goodwill for the profession. And you are doing wonderful work, and keep it up. We look at you. We are really proud of the work you are doing. I hope you get involved in more and more committees and right in time, interact and deliberate with all stakeholders all over the world.
Thank you.
That's really wonderful, stakeholders, and you are taken out a baton voluntarily. Nobody has appointed you. That is driven by passion, and wishing you all the best. Wonderful.
Thank you, boss.
Any other question specifically before Mr. Amarjit leaves? There's a lot more to discuss.
Yeah. I'm also adding our thanks to Dr. Amarjit Chopra ji. From 89-90 say I know Amarjit, and has been a very active in all the respect. And he has clarified all our various doubts also. So really appreciative of your presence, sir.
Thank you, sir. Thank you very much, Narendra ji. You have been a great friend. That's all I can say. Thanks all.
Amarjit Singh ji, Amarjit Chopra ji, thank you very much, and thank you for coming here and enlightening us on the various aspects. And it was really a pleasure to listen to you. From 1975, as you said, you're serving the profession, and we hope that the profession is able to improve to the standards expected from them. Hoping.
So, Amarjit ji, एक question है last में, that एक side में NFRA, दूसरा हमारा Institute Chartered Accountants, and recently there was an amendment in the Parliament also. So, what do you see all this? Why they are arising, and as against the individual institution of Chartered Accountant alone passed by the Parliament? Of course, आपने बताया था भी, but we found a lot of shoots coming from there, NFRA separately.
I am so glad, Narendra ji, you asked me this question.
Yeah.
See, if you look at the act which has been passed in the Parliament, it is a bill which was passed, and the President would sign it. It talks of 3 institutes otherwise.
Yeah, 3.
But if you look at the objectives, it talks of transparency in only the CA Institute. Number 1, I personally feel very glad. It means the other 2 institutes are redundant from the eyes of the parliamentarians. They feel nothing about them. But the second thing that I feel is probably there's some kind of prejudice or bias in the mind of the bureaucracy or in the mind of the parliamentarians so far as the CA profession is concerned.
Right.
This is most unfortunate. You see, something which was never a part of the bill, which was never in the terms of the reference to the committee, standing committee, that is brought in by way of tagging it somewhere, ICAI concept, Indian Institute of Accountants. I'm shocked how it can happen. It was never a part of the terms of reference to the standing committee, and they say one of the witnesses appeared and said it. I don't know how what has been suggested by a witness can become a part of the bill. So thankfully, the Parliament didn't pass anything with regard thereto. But it goes on to show. And the other 2 things that I would like to tell both the institutes, ICWA as well as the company secretary, they have gone ahead and said that we appreciate the disciplinary, whatever changes are being brought in by way of the disciplinary mechanism or by way of the appointment of the director discipline, etc. I think they will also taste what is going to happen. They have not tasted it so far, because if a non-chartered accountant is going to judge my conduct, I think a non-company secretary is going to judge their conduct, and a non-cost accountant will judge their conduct. And not only this, recently the ROCs have circulated certain list of the cases which are being referred to the 2 institutes particularly. I think all the 3 institutes in which chartered accountants and the company secretaries are maximum. So company secretaries are equally. The most unfortunate part which I feel is that company secretaries who give us the list of the related party transactions, who are supposed to give us the entire amount of the various compliances.
Correct.
And who are actually supposed to ensure the corporate governance, they are getting away scot-free. It's not going to continue. Let's be very clear about it. At least I am very clear. Once this all things get into place, I think whatever has been said by ICW and ICSI, and they have opposed the Institute of Chartered Accountants of India, they will also
it's for everybody.
Of their own thing.
Correct.
I'm sure about it.
Thank you.
Thank you.
I would like to mention here, there are 4 points for open house: Infosys, TCS, HDFC Bank, HDFC merger, and latest on Twitter valuation. Everybody is welcome to participate or share views. We'll have a very brief open house after a long deliberation on this, and then we'll close the session.
Thank you, sir. Thank you.
Nilanjan, yeah, thank you so much. Nilanjan, can you start on Infosys?
Well, on the Infosys part, Manoj, I did not
Whatever you know about it, the results have come. I can just say results for Q4 are tad disappointing as per market expectation. But the key reason is there has been inflation throughout.
Correct.
So cost pressures have gone up. Because of that, margins have come down a little bit. But growth momentum continues. Large orders are coming. So next year is going to be, it is going to be really wonderful. So it's possibly any corrections could be opportunity. That's the way large institutional stakeholders look at it. But you can come out with other issues, whatever you have seen briefly. We always have a good, bad, and ugly. Infosys is considered among the good companies with a good with best practices.
Correct. So I had a couple of observations from the auditors reporting side, because that is my domain. So, maybe from auditors reporting the new requirements on loans and advances, right, on the funding transaction that has been applicable from the current year, 21-22, that I found interesting, because as far as the section is concerned, we are supposed to report in a particular way, right? We are supposed to report on certain funding transaction, which is not there in the financial statements. But I think the way report has been made, it is based on the fact that there is no funding transactions, and for that there is also no disclosure given in the financial statements, and irrespective of the fact that the auditor is commenting on that. So, Manoj, what I found it to be a bit difficult to understand is that the auditor is commenting on a particular item for which there is no corresponding disclosure in the financial statements. So that one thing which struck me, and also more from a knowledge perspective, there had been a couple of way the auditor has commented. For example, normally in a CARO report, you would expect the auditor to preface particular comment in a particular way, but the auditor has chosen to give one master caveat when they have given the CARO report. So these two are the key items which I found to be worth mentioning from an INFI audit report perspective.
Two important other points where Infosys name has got dragged into, fortunately or unfortunately, besides the quarterly results, is one, Infosys would be exiting Russia business. It came over the weekend. I hope it is temporarily. It's a big market, and also the name got dragged into due to related parties, tax return of a related party in UK domicile status.
Correct.
So interesting. It doesn't affect the company, but this is how actually it gets dragged into, and government at a deeper level is looking into such issues and taxability. This shows earnings from India and Indian companies are significant to the global citizens. A couple of decades ago, nobody would have seen the importance of it. But people are making much more money from returns from Infosys globally than they are making in UK. This is also seen in Hindustan Lever, a premier company, making much more business from India than in UK. So this shows the power of Indian companies in a different way? And how do you compare Infosys with TCS? Then we will move on to HDFC merger and look at Mr. Narendra's views especially. How do you see the TCS reporting on versus Infosys?
So unfortunately,
companies, TCS is a much larger company and achieved a very landmark turnover.
Correct. So unfortunately, the TCS reports are not available. They have only given the financial statements. So it is not a good way to compare both of them right now. But I think from a number perspective, they have a huge hit with this time, and they have made a very good progress in terms of financials are concerned. On your question on the Russia exit by Infosys, what I am also personally experiencing, Manoj, is that as far as the pharma space is concerned, for example, Dr. Reddy's or the Sun Pharma, they also would be affected because of this Russia and UK conflict. So maybe we can also watch out how they are trying to incorporate the impact, especially by way of a numerics or by way of a disclosure when we analyze their results as well. But from a financial reporting perspective, I don't have anything on the TCS as such.
You mentioned about pharma. Interesting thing about pharma is this wartime, it requires much more medicine, first aid, and huge population needs medicine, whether due to physical injuries or due to mental depression.
Right.
It increases to a large scale.
Right.
Insecurity and anxiety. And Prime Minister is known to say, he just made a statement, Hyderabad could be a major exporter of pharma, a global hub, as Bangalore has become for IT services.
Right.
So positively, and even Russia and Ukraine both need medicine. Where do they get it from? They get it from India. So business will improve. So reporting also, they need to meet the expectation of stakeholders. Now the vital development on HDFC Bank, HDFC merger. First, I would like Mr. M. Narendra to speak, and then Nilanjan and others, we look at deep dive. Mr. M. Narendra, largest in market cap bank, NBFC coming together. The chairman has said, father feels son has grown up and can take charge.
Okay, whatever maybe the reason can be given, but the fact is that Reserve Bank has been making all laws, all regulation, all supervision, everything equally applicable to all lending institutions. So that is the one, first of all, the arbitrage or regulatory arbitrage or any flexibility which were erstwhile available to NBFCs are being almost getting taken out, or it is in a way, in the limited way only. Second, of course, the point that in a way, now NBFCs are also given an opportunity of a size of 50,000 crores or whatever to be converted into banks. That is another which the internal committee has recommended, which may be coming. And RBI has also clarified that as per the level, the supervision of the RBI will go on enhanced measure, and the HDFC Limited as NBFC will come under that provision of close supervision. So from the regulatory angle, whatever each of them or the HDFC Limited particularly had a certain its own leverage has been slowly going. So this was there in the offing, I think. I am not a stock market analyst, but it may be the offing. But to that extent, is it advisable or is it good for the HDFC Bank? I am because even the market report says later, the challenges are many. A institution which was primarily only on the housing, primarily, and they had a wholesale as well as a retail. And even maybe in some of their subsidiaries, they are very aggressive in wholesale lending also. And in all that, so many subsidiary and all that, how they are going to be managed in terms of the overall, the HDFC Limited merger for the HDFC Bank. And HDFC Bank has to manage its own portfolio. It has to also had a retail, what you call its focus. But along with that, they have SME, they have a corporate banking as a most of their, it amounts to their in terms of what you call fee-based income. They had a nicheness. Even though size has been grown, they had some nicheness in their own activity. Today, with this HDFC Limited getting there, this nicheness is, I don't think it will be there. And already they had a problem when their technology could not face with the growth of the credit card business, which they are now getting rectified. And recently RBI, after 1 year or ban, they released it. Now, if you have to manage all this for a certain period of time, their performance will definitely get a little affected. This is my view. But of course, industry, there is a merger now, lot of amalgamation merger, and they had come back. To that extent, the ability of the amalgamation and merger has been proved correct in terms of the public sector bank. But whether organization which were only on the, actually they had no liability support. And all along, they had a long-term borrowing and some nicheness in borrowing. Now today, they are trying to eat away the liabilities of HDFC Bank. And that's why they had to merge. These are all, of course, it is not to be recorded or anything, but in a way, it looks like that, their father has become old and all that, nothing of that. It is primarily, I think they thought that this may be the better way today and to achieve a big size. And after the State Bank, I think their size is the number 2 comes, and they have beaten all of the others in terms of size. But the size alone, how far they are equipped, what type of focus will be on the housing segment, along with the other activities of the HDFC Bank, and how that merged entity will enable future growth, and how the overall leadership will play in terms of the running this entire business. Even though it has been mentioned that the HDFC Bank CEO himself will manage, and suppose what was his exposure to the retail segment in a way. So we do not know all this. So how the Reserve Bank will take in this also, they will be happy in a way that is getting into the bank. But is the overall that adequacy and of the system, procedure, and technology, people, all that will be seen in the context of this great merger. So there is a likely that for a shorter period, there may be lower growth and lower profit or whatever may be. But in a longer run, that may help also. This is my overall view, but I am not as expert in the other aspect. But generally, I am hearing whatever euphoria was there before and after the merger, that has been slowly subsidized. And now how to manage this merger, how to sweep up the momentum, how to keep the supremacy of HDFC Limited in the HDFC Bank role, that may become more important in the bank itself.
Great. Mr. Kannan, you are there? Nilanjan, how do you look at the merger?
Yeah, so I completely agree to what Mr. Narendran had said, and in fact, what he mentioned is about the mammoth size which the resultant entity will have, right? So what I have always felt, in my experience is that whenever you're doing a merger, there is not only a merger of numbers, but it is also a merger of culture, right? So how, even though we can say that it is under the same umbrella, but my environment in which these two entities used to operate are completely divergent. So now it is on the time will only say how they will be a more of a cultural fit, because that will ultimately send out all those synergies and all those efficiencies that they strive to achieve. Right. So in a nutshell, I do agree what Mr. Narendra said very categorically.
And Nilanjan, the space left by HDFC Limited, by being merger, now that advantage will come leaders like State Bank of India.
Exactly.
So see, because in the intervening period, State Bank will focus more further on the retail lending, and they are already a all India. This one. Another thing, as you rightly said, HDFC Limited is a lean organization.
Yes.
They had a lean, in spite of they don't have that much, number of employees and all.
Correct.
But that their productivity was very high.
Very high.
in the lean organization,
Yes,
and it
yes.
was a market model.
Right.
And it was a brand for the every such person in India. There may not be anybody who doesn't have a relation with HDFC Limited in housing.
Exactly.
Now,
exactly.
that whether that will benefit the HDFC bank in per se, I don't think.
Correct.
So these are all some of the issues. In what way they thought and why it got it done. See, there can be okay.
Yeah.
There in HDFC Limited also they should find a new leaders.
Sure.
Why the same leaders? Because they felt they have become more old or something like that. No, you find a new leaders there.
Yeah.
The market is not less of in new leaders.
Correct.
So it's the same case. I was told that LIC housing, I saw in paper report that after that LIC housing also will have to decide after the LIC becomes IPO.
Correct.
Similarly now then later like PNB housing, all that, whether that will come back to the bank or what way there is a necessity, all that, but they are all small. This is a very big. So
Very
this
big.
is to be watched and seen.
Yeah.
Yeah,
Only
sir.
time alone can say
Sir,
that,
one
sir.
Yes.
point just to highlight over here. Sorry to interrupt.
Umesh,
Umesh
put your
Narayana.
video on.
Yeah, I put it no video. I made it on. See, the point is that HDFC Limited is a brother pioneer in housing finance, and it's a specialization field which they are handling for more than many decades. Now, when you think about merging with the HDFC Bank, see, it is a focused business which is going to be disturbed. And even if you see the bank, the core banking activity is a different story. And when you go to the housing sector, lending the housing, it's altogether different forte as such. Once you go for merger, I think there is a dilution, and the entire business maybe may not come to the HDFC Bank. It may be spread to the other financiers who are into housing finance, and that will create a lot of big impact to the financials top line of the HDFC Bank as such. After the post merger, I'm talking about this post mergers.
HDFC Limited took over Group Finance, and then they sold it to Bandhan Bank. Why they should have sold that way? So that means they have made up their minds on quite a long time that हम थोड़ा business slow करें और बैंक को देंगे. आप समझे? पहले वो they sold the Group Finance, no?
Yeah.
Why they sold?
Yeah. So
Yes, yes, Kannan.
So basically, my understanding was that now all these banks are becoming bigger and bigger. Of course, government initiative of making PSU banks much larger, merging them. And we also see that again, ICICI Bank has picked up pace in terms of their old pace. And Axis Bank has acquired $2 billion of assets from Citibank. So now, like Dr. Narendra said, the arbitrage, regulatory arbitrage between large NBFCs and the banks are shrinking. And as far as the merger is concerned, they also thought that they need to have, you split 7 lakh crore and 6 lakh crore, 13 lakh crore. That is not a very large entity. And one more thing, it was mentioned that they did not have a relationship. Actually, I remember 15 years ago, whatever loans which were being given by HDFC, they were being initiated by HDFC Bank. HDFC Bank was earning a fee income on that. So there was a synergy. That is one. Second, in terms of culture, there was mention about culture. If you go to whole of HDFC group, there is a lot of emphasis on defining the system and procedure and clearly sticking to it. So the importance for system and procedure in HDFC group is more important than people. So they will go only by rule book like a government organization, but not so slow. So they'll go only by rule book. Just because somebody is a CEO or MD or credit committee, they cannot contravene a rule. So they are very, very clear. So what I believe was that, plus I believe when these two merge, as you are all aware, most of the mutual funds in India, they hold both HDFC and HDFC Bank, and they are holding, if you just see, of their total holding, 13 to 14% is these two companies only. And I believe if it is above 14% in the index, suppose in case HDFC and HDFC Bank, they are going to have an index weightage of more than 14%. I believe it is going to be part of MSCI index. So we already know that HDFC Bank commands highest market capitalization in the world in terms of PE ratio, book value ratio and all. So they thought that merging both, maybe the value which is being derived by HDFC Bank can also come to HDFC. And of course, we are reading a lot of synergies in terms of how this will reduce the cost of funds for the entire entity. So there are many advantages. But if you ask me if they had kept it separately, it would have been a more advantageous position. But now it is becoming a single entity. So anyway, managing a large organization compared to a smaller one will be more complex. That's all what I wanted to share.
Thank you. I would add there are basically 3 points in the merger. One is cost. HDFC Limited as well as HDFC Bank has been known for among the lowest cost to income ratio. That is before synergies or the merger. HDFC Limited, lowest cost to income ratio, lean organization we talked about. HDFC Bank, lowest cost to income ratio among all the banks. And another point is this merger, besides bring a lot of operational and financial synergies too, cost of deposits will come down significantly. Everybody knows the FD base of HDFC, very large fixed deposit base of depositors. HDFC culture known for trust and integrity. Parekh, other board members. In HDFC Bank, known for deep dive, very high quality underwriting skills, and culture created known for penetration in the market and good underwriting skills and excellent collection efficiency, which there may be deficiencies in many other things. Of course, loan business, you will be having stress, but finest collection efficiency. And what will come out about now, synergies will come in terms of cost, deposits rates among the lowest. So significant increase in the margins, they will go up. And also sooner or later MSCI listing would increase the funds availability for growth. We have seen the best numbers so far, highest growth in terms of the key parameters which came in the first week of March. Today results are there. So there is a tremendous growth appetite in the real estate market. Real estate cycle is good in terms of number of months salary required for owning a house is the lowest. And another leapfrog, and for that MSCI listing would help us significantly jump up the ranks, #1 in India, but soon it should not take time to be in the top 25 in the world, hopefully. I wonder how many years it will take. So lots of things. And Nilanjan, you have seen a lot of mergers as a technical director.
Right.
There are lots of financial complexities in merger.
Right.
Do you see what challenges you foresee in terms of financial complexities in merger happening, and also on a fast track basis? Because earlier it happened, both of them will operate as separate independent entities, but the day it happens, effective day, the cost will come down speedily and synergies benefit will come, and sooner MSCI listing should happen and take HDFC Bank to the next stage of global growth, with huge propensity of growth across India, huge potential.
Manojji, rather instead of cost, they must have afraid about the increasing compliances. Too much of compliances. Everybody is thinking of merging multiple business. They are trying to merge in one to reduce the compliances. That is, I think, the foresight of all the major managements. You see, many small companies are getting merged into some other, and they are even in family groups also multiple business they are bringing in one to reduce the size of compliances. Too much of compliances is rather making it difficult to instead of the ease of business, it is a difficulty of business. That could be one reason. Please.
Yeah, Nilanjan.
Yeah. So from
Address all the issues. Yeah.
So from an accounting or from a merger perspective, what I feel is that see, right now the accounting standards are pretty clear, right? On what is supposed to be accounted for. So as long as the entities are following the defined accounting framework, right? And I don't think HDFC being of that category to deviate from those requirements. I don't feel from accounting they would have a challenge in terms of recognition of merger. But yes, size will obviously be a factor for them. What they should also look at is that how we can fast track this merger. So, for example, they are merging certain subsidiaries to HDFC Limited first, right? And then HDFC Limited is getting merged into the HDFC Bank. Now, when we are doing this step-by-step acquisitions, can I use the regulatory framework of fast-track mergers to merge them rather than going through the normal route, right? That one point they should probably look at. From a complexity perspective, yes, the complexity of a bank is quite different as compared to NBFC are concerned. So when you are merging, let's say, your loan portfolio from an NBFC to a bank, there would be various accounting considerations that would apply. But yes, HDFC being HDFC, I think they would obviously be cognizant of that aspect, especially from a NPA classification or from an impairment loss provisioning perspective. That could be an issue, but again, HDFC being HDFC, I don't foresee that to be a big challenge at all for them.
So Nilanjan,
yeah, Mr. Narendra, yeah.
Mera a question. I think this may also lead to some of the public sector bank, maybe state bank.
Right.
They can look at some of the NBFC in the focus area of what they are looking. Suppose housing, correct, or maybe unsecured advance, correct, or any which are very corporate governance. Everything is good. Correct. They may also acquire, or what, correct, you call, there may be acquisition. Correct. So correct, then the players will remain very minimal in the exactly. Overall financial service space itself. That may happen.
That I completely agree. Yeah. Because now considering the size of the market, everybody is looking at having more concentrated and high quality services, right? So if I
at the same time, there will be innovation, creativity, yes, and yes, niche players will be allowed to come into a mature space. Correct. Again by new licensing, or new promotion, new activity. Correct. And when again somebody has a appetite for that gets acquired. Right. This in the industry, so that one side there will be good licensing further open up. That may be either on the wholesale side or the retail side or the payment side or the SME space, anywhere. Correct. According, correct, to the activity. Correct. Other than the fintech and what you call your P2P or other innovators. Yeah, yeah. But all of them also likely to come under regulatory guidelines. Like, correct, RBI has already, all digital players will have to be either on self-regulated or they have to come. So slowly, opportunity market is so large and everybody can exploit. But the mighty players will always look for opportunity to acquire.
Yeah. So ultimately, the law of dominance will prevail, right? If I am,
yes,
if I am able to dominate and if I am able, yes, to survive, I would be able to see the light of the day.
What is happening in even in the main lover Mukesh Ambani also, what is looking globally and domestically. If there is something which is even in the restructured space, Reliance is acquiring the opportunities there. Who has a cash? They are the opportunity.
Yeah. Nobody would have thought that Reliance will foray into this digital market, but the day they have, now you can see all those proliferations across entities and across groups.
Correct.
Right.
So Nilanjan, how fast can a merger take place looking at the complexities regulatory? Can
See,
it happen in 6 months?
No, I don't think so, because the timeline which the management itself has put out is 18 months, right? So they are itself looking for an 18-month period to consummate the entire merger. So even though, let's say, they are not taking an 18-month period, I don't foresee the entire objective being met at least less than a year. So the merger of that size would involve significant amount of time. It is not just merging a subsidiary into me, but it is that step, as well as then creating the largest banking entity in the entire country, right?
But
So it is,
Nilanjan or
yeah.
Manojji, I think, or Kannan, they would have sounded the regulator, Reserve Bank, I think, no?
Yeah.
Definitely.
Yeah. So if you
The
would go to
Reserve
their
Bank governor on the next day, when he talked about the policy, that was
Yeah.
the first question put to him and he acknowledged about it.
Then they had sounded actually.
Yes, he sounded that. And Sony and Z, among the most complex mergers, everybody knows about investor issues
investors
and governance activism by one investor in spite of good governance. They talked about 9 months. And it is moving ahead, and still the timeline remains the same in spite of some obstacles in terms of legal courts issues. Now they are sorted out. The investor has bowed down and accepted. But that was 9 months. And here, when the governor of the central bank acknowledges on the next day, so 18 months is Mr. Deepak Parekh is always known for conservative and outperforming. So you talked about a year. If Sony Z is max 9 months in spite of the hurdle, so it should take much lesser, because that will help the India growth story. It will also help the business.
It would definitely, Manoj,
So
but
they need to go fast track on it.
Yeah.
To have the earliest possible general meeting for approval, competition commission, whatever stakeholders are there. Of course, RBI is in a loop. And they are not asked for any special dispensation, which takes time.
Right.
Very clear. They are not asked for any special dispensation, and they are just would be 100% compliant. Let's hope they do it. As you said, the accounting standards are not. They can be complied instantly with the high class professionals they have.
Correct.
So that should help. Anybody has any issues on HDFC merger? We expect many more mergers to come. They will take the lead. Many more will come. NBFCs need to reduce the cost of funds. There is buzz about Bajaj and M&M, and Mr. Narendra mentioned, 50,000 crores. So we wonder whether India Bulls, possibly the name will be changed. Housing, Mr. Mundra is in command as a non-executive chairman. Whether they would also, under fair practices, can become a bank and reduce its cost of funds. LDB did not work out for them for maybe some political or whatever issue. And if it is, then other NBFCs also gets a chance of a level playing field and to compete with HDFC, number 2, number 3, it is the second largest player. Bajaj, M&M Finance, NBFCs, L&T Finance, there are many large NBFCs. If they can also get opportunity to reduce their cost of funds. Bandhan and all microfinance, they have reduced because they have got payment banks, many small banks. Another point, anybody can comment. Twitter, what happens? Just by a tweet, somebody gives an open offer of a $43 billion valuation of a company. This is what the world is. A one tweet, it's a credible offer, $43 billion. Here we are talking in terms of different language, in terms of acquisition. SPACs and all will take long time, like company law committee, working deliberations and all. One tweet, and a key stakeholder holding 5% of Twitter says, even if it is delisted, I will not offer my share. Growth story. growth story of Twitter on free speech. Business models will come. Free speech for the global billions of population. This is valuation game is changing now. Acquisition changes, the way of acquisitions is changing. How soon do we expect such things in Indian companies? Would Elon Musk like to take over a very scientific, innovative company or a digital Indian company and offer billions of dollars to an Indian platform? Would Amazon offer to take up maybe a media company or a digital so many content through a tweet by its current promoter or the CEO? How soon that will happen? That will show India has arrived. One is fast track deliberation on the amendments, the regulations. Other is offer valuation. How that $43 billion will be offered, cash or stock swaps, nobody knows really. Does it hold? Is it a binding offer? Is it a non-binding offer? Nilanjan, what do you say? In Sony, we heard about non-binding agreement, due diligence, then a binding agreement, then subject to regulation, subject to court, subject to investor coming in, general meeting happening, not happening. And here a tweet offering clear valuation. What if he doesn't offer? And we talked about Goldman Sachs valuing at $25, $30 and offer at $54 and market cap jumping up by 18% in a few days. How billions of dollars can move the markets globally? A tweet. And although there is a bot armies trying to malign the platform by false news. So, and the business model of the company, the future model suggested mission, free speech. Nilanjan, what you have to say to that? Then I would like others to join in before
I think on the sanctity of that tweet, or as you rightly put, whether it is binding or not. Well, I think it is in my view even less than being a non-binding, right? We had been aware of the statements which Elon Musk makes, right? He had his own behavioral issues. He has his own eccentricity in making statements. So I would not like to give too much of a weightage to his statement. He would have just made a statement out of his own wish, and we obviously know the challenges that he's facing when he was in the board of Twitter anyway. So I don't think it is more of a promising venture that he would have made it. That's my personal take. Let's hear what the others feel about it.
Mr. Kannan, Mr. Narendra, anybody else would like to share thoughts? Loss of intricacies, valuation, acquisition, modus operandi, credibility of the person. He has money. He can put his money where his mouth is. Unless the tweet is withdrawn, if not already done. Any other thoughts? Archana? Anybody has any issues which can be addressed before we close? Mr. Narendra? Yeah, Archana, your thoughts on mergers, valuations, and what is happening globally. And then finally, would like you to give the formal vote of thanks and end the meeting for all.
Yeah. So actually, Manoj, I don't think I have no comments to make on the mergers and acquisitions as of now. Anyone else has, then please contribute. I think Manoj, we can end the meeting. Yeah, thank you so much, Narendra ji, Manoj ji. Thank you, Nilanjan, for the excellent presentation. Thank you, Unmesh Narvekar ji, for your questions. Thank you, Peshavan. And thank you, everyone, for your contribution to this interactive discussion with Amarjit Chopra ji and Robin Banerjee ji. Thank you so much.
Thank you, Archana, for the
well done, Nilanjan.
Thank you,
Yes,
sir.
yes.
Thank you. Thank you.
Very
sir.
good. Keep it up.
Nilanjan, you are the host. You can end
Yeah.
give a final comments and end the meeting for all.
Yeah. No, I think from a personal side, it was quite enriching.
Excellent,
Especially
excellent.
when you were interacting with all the senior members of the professional. I am really glad that Manoj ji gave me this opportunity, and I thank him for his trust in me. I hope I have been able to meet the expectations.
It was a great presentation.
Thank you.
Thank you.
Okay. So then we can end it, Manoj ji, if that's fine.
Nilanjan, you can end the meeting for all. As you're the
Sure. Yeah. Okay. Thank you.